Yeah. Margin's calling, but I ain't answering. Alarm goes off, I don't snooze that shit. Phone already buzzing, futures lit. Didn't shower, still smell like smoke, but they can't look good, so I let it roll. They said sell early, lock it in. I said nah with a grin and another 10. Stop loss loose, risk tolerance gone. I ain't lucky, I'm just dead ass wrong till I'm not. Everybody's smart when it's sideways flat, but I size up big when it snaps like that. If this goes south, I'm fucked, I know, but it won't. I'm all in drunk on a green ass screen, levered up like I'm 23. If it rips, I'm a problem tonight. If it dips, I just double my size. No plan B, just balls and charts. Playing chicken with my own damn heart. Say it's dumb, say I'm out of my mind. I'm all in drunk on a green ass line. But it plays safe, still broke somehow. I play stupid and I'm eating now. Same boots, same bar, bigger tab. Screenshot wins, never posted bags. X said you still gambling stocks, yeah, and rent still pays, so it's working now. High risk, stress, broker, smiling wide. I don't need faith when momentum's high. I don't manifest, I don't wish or pray. I read the tape and I press buy. If this thing cracks, I'll deal with it then, but it won't. Drunk on a green ass screen, levered up like I'm 23. If it rips, I'm a problem tonight. If it dips, I just double my size. No plan B, just balls and charts. Playing chicken with my own damn heart. Say it's dumb, say I'm out of my mind. I'm all in drunk on a green ass line. Show the nights you almost puke, mouth shaking thinking what I do. Conviction ain't calm, it's loud and mean, and I still hit by when it felt obscene. Still did. I'm all in drunk on a green ass screen, revered up like I'm 23. If it rips, I'm a problem tonight. If it dips, I just double my size. No plan B, just balls and charts. Playing chicken with my own damn heart. Say it's dumb, say I'm out of my mind. I'm all in drunk on a green ass line. They call it reckless, I call it Tuesday. If you want, I can.
Oh, brother, oh, brother, oh, brother.
We are back. We are back. We are so back. Good morning, good morning, good morning, folks. I cannot tell you how incredibly happy I am. Not only the fact that I'm back here with you, which is, of course, my favorite thing to do. Who wouldn't want to be gambling in the world's largest casino with thousands of their digital internet friends? I love doing it. But more than that, at least on this specific day, is the fact that I am back here with you after a lot of long and painful travel. Unless you've been living under a rock, you probably know that one of the worst storms ever has just hit the U.S. And for a little bit there, for about a day and a half, your boy was stranded on the West Coast. And then finally, after flight cancellation, then I got one that seemed like it wasn't going to get canceled. You get to the airport, and of course, the second you get into the airport, rather than hanging out at the resort, of course, right when you get to the airport, delayed. So I was already predicted to get in late last night, and then it just got way later. So if I'm being completely honest with all of you, I'm running on maybe a couple hours of sleep right now. So we're going to see what kind of show we can put together today. And what's crazy about it is, unfortunately, even though in the state of being sleep deprived due to the craziness of travel, there is an incredible amount of things to talk about. Yes, I'm going to be breaking down some of the major things of the day, but as you're quickly going to understand, the day itself is kind of constrained in terms of like where the bets are. And like it's a holding pattern. The term I always use is I predict we're going to violently go nowhere, similar to yesterday where like, yeah, we were kind of grinding up and then we gave it back. And technically it was a gain on the day, but nothing too crazy. And as I've been kind of, I don't know, I suppose predicting, we'll call me the Oracle of New York here instead of the Oracle of Omaha, like our boy Buffett, because he's washed up now. This is exactly what I was looking at. I was looking at that slow grind. Hello? Can we help you? This, like, she just has no respect for the fact that I work. Just absolutely no respect for the fact that some of us have actual jobs. Some of us in here have like real Piper. I'm literally, this isn't even a dry run. This isn't something I can like just re-record. This is live, Piper. You're on live air. The top trading show in the entire world, and you're just interrupting it. You think the whole world's about you right now? This could potentially reach billions of people, and you think the show's about you? You think the show is about you? Anyway, where was I? Lots to talk about. I'm going to show you how the market itself is kind of showing some concepts of restrained bets today. I'm going to show you that really the positive gamma node on SPX is between 69.50 and 80. That is the transition zone of the day. And basically, it seems like all the big money players are waiting to see how the show really gets rocking tomorrow. Why tomorrow? Why Wednesday the 28th? Well, today's the start of the FOMC meeting, and we get the results tomorrow at 2 p.m. Of course, I will be streaming it, but we get the Fed interest rate decision at 2 p.m. where they're going to be telling us, hey, we're not changing the interest rates. There's a 99% chance that there's no change to the Fed fund rate. So, of course, the fact that we know that, the common question is, well, what's going to happen afterwards? Well, it's all really going to relate to the other things that the Fed members are talking about, and we're going to get a little bit of an update in their text, their commentary that comes out at 2, but it's more so the Jerome Powell speech at 2:30. So that's a big thing for tomorrow, Wednesday. But what's crazy about this particular FOMC meeting, it's the same day as some of the major earnings announcements. So basically between today, tomorrow, the next day, and really the day after, we just have a lot of like gigantically influential reports. And then from there, just to put a couple, I suppose, sprinkles of volatility into the situation, we're also going to like have to deal with this insanity of silver and gold. I know many of you in chat have been paying attention to it. You've been trading it, seeing kind of what's up and who's who. And you probably know that yesterday when I was still just bored sitting in the airport, I was reading that silver's moved to the upside and back down to the downside yesterday on an intraday basis. The upside move was a 3 standard deviation move, and the downside move was a 4 standard deviation move. And the chance of that happening the way it did was 0.002% chance. So if you at all paid attention to silver yesterday, you literally witnessed history play out. From a math, statistical, nerdy financial standpoint, what happened in silver yesterday was like, by definition, not supposed to happen. So we have craziness going on in, we'll say, safe haven assets, like almost as if it's a meme stock. These are now the largest assets in the entire world, gold and silver. That is happening when we're getting an FOMC meeting. And this particular FOMC meeting, it's all with the drama of Greenland and the EU and who's going to be the next Fed chair. And obviously, Trump and Powell aren't really getting along. So we're going to hear about that. There's just like a lot going on. And this is kind of the night before. So I guess for traders making some degenerate bets, this is equivalent to Christmas Eve. So my job this morning is obviously a little bit closer to market open. We're going to get into like the specifics of today because there are key levels, and I think there's still going to be good opportunities for a little scalp here and there, especially if you're trading on your sim to funded prop account. Maybe a little bit of an opportunity to sell premium, but you should be a bit careful about that today, and I'm going to explain why in a second. But more so than that is like I kind of just want to get you guys really set up. What are we doing here? What are you doing? Do you want to finally take a nap? Take a nap? We'll see if she'll stay in her bed today. Do you know how many beds that cat has in this office? And then she just chooses to stand on the desk instead. Very excited to be back with Pipe. So anyway, I hope you guys had a great weekend. I know it's been a minute. My heart was as well breaking. We weren't able to hang out Friday, Saturday, Sunday, or Monday. It was supposed to be a one-day off thing, but the weather situation got the better of me. So my apologies for that. But on the bright side, it did allow me the opportunity to hang out with all the new members of the Goonie Trading Discord. If you're not in that yet, feel free to check it out. We're revamping the entire landing page, sign-up process, and then starting this week is when we're going to start releasing some of the new features to bring that Goonie Trading Discord to the next level. If you want to join, check it out. It's great for options trading, it's great for futures trading, and it's kind of just a great place to bullshit throughout the day to stop yourself from overtrading. A lot of people just hanging out, waiting for those right opportunities in the market. So with that being said, let's get rocking, see what's actually happened today. Let's get rid of this. S&P 500 futures rise ahead of this week's big tech earnings. Big tech earnings and expected increases in volatility and the FOMC meeting and political uncertainty. There's just a lot, and we're going to be covering it. But just very quickly to give you kind of a snapshot of it, we are within striking distance of the all-time high in the S&P 500. So I very much do want to point that out to you. SPX right here, that is the actual index. SPY is the ETF tracking the index, but the all-time high is 6986.33. So I have it marked out multiple places on my chart because that's a very, very real possibility on the day. If you're looking for the SPY equivalent, it's roughly 696. The Qs technically don't have an upside gap fill, but NDX does, which is the actual index. So there is an upside gap fill on NDX to 25887, and then from there, obviously the all-time high. The Russell hit an all-time high last week on Thursday, taking a little bit of a breather, but if I had to guess, I would think that this is just going to be another higher low, and we keep going. And if you're here, there's a good chance you're paying attention to the fact that gold hit another new all-time high yesterday and then sold in silver. So there's a lot going on. There's a lot to discuss, a lot to get into. So let's start breaking it down. The EU and India clinch mother of all deals in rebuff to Trump. So I like to start these off by like kind of giving you some of the overall picture, not just for the stock market, but generically the things going on in the globe that might impact either the economy or the stock market or some combination thereof. And it's been a while where we had for most of 2025, all the news was this tariff, duty, Trump trade war type of a thing. Then we took like a couple month break, and recently it's starting to pick back up. And we can see that directly in the chart. So if I go back to the S&P 500, for a while it was quiet and we were slowly but surely grinding to this all-time high. Then we took a little bit of a hiccup, like a 150 point hiccup when Trump said, hey, 8 of those major countries in the EU who don't want me to have Greenland, I'm going to tariff you. Then in his speech at Davos and a follow-up after that on True Social, he basically said, you know what, we came to a deal and we're not going to actually be doing that. And then surprise, surprise, we bounced right back up to where we were. So if anything, history tells us, kind of going all the way back to February of 2025, anytime we're hearing the murmurs of an increased tension in one way or another, uncertainty due to the Trump administration tariff situation, it seems like all those dips, at least till now, have been to be bought. Buy. Every single time the market takes a little bit of a hit because people are like, whoa, what's going on with the tariff thing? And then, of course, it makes its rounds on social media, on mainstream media, and everyone freaks out. And they're like, this is the top. We're going to crash. Oh, my God. And then guess what? You fast forward a little bit, and we're still continuing the journey higher, and it just proves to be a higher low. Eventually, this trend will change. No trend persists forever in the market, but the current trend is very, very evidently strong. So the recent round of this particular news kind of doesn't involve us, and now the world is like awkwardly just kind of kicking back, waiting. India and European Union have closed a landmark free trade deal. Prime Minister Modi says a lot of people think that this is going to have a big impact on the automaking industry, so probably something worthwhile to pay attention there. People are just waiting to see what Trump says. Is he going to be happy about it? Is he not going to say anything? Is he going to be happy maybe? I don't know. All eyes are on Trump's reaction to the mother of all deals between India and the EU. As we're speaking, I believe Trump is actually doing a radio interview like literally right now. So there's a good chance we're getting some updates on that in real time, and I'll make sure to check one of my news sources over here to see if I see anything of interest. But just to give you guys very quickly the skinny on the situation.
The EU's Ursula von der Leyen and Antonio Costa are in New Delhi to mark a historic free trade deal, which Prime Minister Modi has hailed as a significant agreement. Bloomberg chief Europe correspondent Oliver Crook is back for more. Ollie, why did these negotiations take so long? And is the fact that they're seemingly now over the line likely to provoke the wrath of President Trump?
Well, yeah, let's connect those two ideas. I think the question may not be why it took so long, but why did it happen now? And why did it happen only a couple of weeks after that Mercosur trade deal between the European Union and Latin America? And the answer is that after 12 months of Donald Trump and 12 months of a sort of tariff roller coaster, a roller coaster that does not appear to be ending, whether you look at what's coming to South Korea overnight, or you're looking at the sort of disagreements last week on Greenland and tariffs, basically the Europeans and India is still facing a 50% tariff from the United States. The Europeans have put their trade deal with the United States on ice after the sort of spat on Greenland last week. They need to find bigger markets. They need to find stability across the world. And that is the ambition of this trade deal that, as you say, Lizzie, has been 20 years in the making. It will include more than 20% of the world population, more than 20% of the world GDP. And the hope here is to try to get access to the Indian market by European companies, namely on things like machinery. Obviously, they'd like to sell cars there. India has had very, very high tariffs on cars and automobiles. The Indians would like to sell textiles, minerals, and other things into the European Union. This is not quite as expansive and as free a trade agreement as you see with Mercosur, but it's certainly a significant step forward and an important signal for the European Union trying to diversify away, A, from the United States, but B, also from China. There's also a security and defense pact that the Europeans are signing with the Indians, which will also serve their geopolitical interests, because right now India buys a lot of its military kit from the Russians. They'd like to see some of that being bought from the Europeans. We had some reporting out a couple of weeks ago that the Indians were looking to buy, for example, German submarines. But when we think about the impact of this potential trade deal and what it could have on the European Union, we have the numbers here from Allianz giving a couple of a flavor of that. It could increase the sort of exports from the EU to India to the tune of about $20 billion. It could boost European GDP annually by about 10 basis points. But key here, Lizzie, is it could offset nearly a quarter of U.S.-related export losses from higher U.S. tariffs from the European Union to the United States. So this all part of that effort to try to diversify away from the United States in this moment here of what we can say is more European pragmatism and indeed more Indian pragmatism.
So in a nutshell, a pivot away from the potential volatility of the current administration. Smart move, dumb move? Well, I'll tell you in a couple decades to see how this actually ends up playing out. But kind of interesting updates here. And then there's even now some murmurs of maybe some other countries, once again, specifically not the US, making different types of deals with China, basically saying, okay, if we're not having the easiest trade time with the number one company, like economy, not country really, but the number one economy in the world, maybe we should start looking at number two. So interesting to pay attention to, and more specifically today, like I alluded to already, I believe Trump is currently giving a radio interview. So I myself am curious of how he's going to respond. Moving on, switching up gears a little bit, Trump and Democrats hurtled towards shutdown after Minnesota killing. So some of the major news that I missed while we were away was, once again, the tensions are getting crazier than you could ever imagine in Minnesota. And it's getting to the point where not only on the Minnesota Tim Walz side, but also on the administration side, some of the tune is starting to change. It seems like they're like all sides involved. They're starting to realize how crazy this is getting. Because like I said, we're far past the point of tensions are bad. Like they're beyond horrible. And hopefully for everyone involved that this is the peak point, the high watermark's in, and we could start to calm down from here. So not only is there a little bit of uncertainty and chaos worldwide, especially if you've been following what's going on in Iran, but although so specifically here in the U.S., things are pretty intense. So if you're there, family, friends, loved ones, if they're there, my thoughts go out to you, because this is just absolutely insane what's happening. Tensions are so bad. Obviously, as you can see from the headline, people are losing their lives, and this is happening in America. So you kind of once in a while get cold to the fact that, like, when we hear this news, we kind of assume it's elsewhere. And then all of a sudden, when you realize that this is potentially like literally directly in your neighborhood, it's kind of a sobering moment. So another thing to pay attention to, especially as it relates to uncertainty. Risk of a partial government shutdown this weekend is rising. Here's why. So what does uncertainty like? Well, even more uncertainty. Democrats want change to the Homeland Security bill after deadly Minneapolis shooting, but time is running out. So you can quickly see how I understand how sometimes when I cover this news, you're like, what's that have to do with the stock market? What's that have to do with the economy? Well, the tensions in the U.S. are now impacting how Congress people are going to vote, and how they vote determines if the government's going to shut down or not. And of course, the government shutdowns or not, that has a huge impact on the stock market and clearly on the economy. So it is all kind of interconnected. Congress is running out of time to pass a sprawling appropriations package before current funding for much of the federal government expiring at midnight on Saturday. So this weekend, we might have another government shutdown. Just to add on to the craziness of FOMC results tomorrow, huge amount of earnings. We're just getting over all that delayed data. Next week, we have the unemployment report. It kind of from like mid-December up until recently, volatility has clearly been low with a little bit of a spike there with the whole Greenland EU tax thing. But other than that, it's been low. And now you can see for the next couple weeks, we're clearly set up to have higher expected vol. Senate Democrats said they won't support the bill without changes to the provisions regarding Department of Homeland Security, raising the risk of a partial government shutdown this weekend. So if you look at call sheet, the chance of a government shutdown is more likely than not. There's 76.8% chance that, in fact, the government will get shut down. So once again, just to reiterate, it is more likely than not that to some degree or another, it's not like a full-on government shutdown this time around, but it is a partial one. You can see it started to spike right here. January 24th. And this is actually from a conversation with Trump where he said, yeah, I kind of expect the government shutdown. So as soon as he said that, you can see the odds skyrocketed. So once again, at this moment in time, it is more likely than not that the government will be shutting down as we get into February. So I just want to put that on your radar. Other things you should pay attention to this week. We got the durable goods orders today. You can see coming in higher than expected. Not the biggest news. We do have apparently Trump speaking at 2 p.m. today. Does anyone know what this is about? I knew that he had a radio conference right now at 8:30 a.m. ET. Does anyone off the top of their head know what this one is about? Because if in any way it relates to the market, we could stream this. But I do want to bring to your attention that Trump is speaking again tomorrow, and we have an FOMC decision tomorrow. So there's a lot going on there. But does anyone help me out on this one? Speaking from Iowa. Is it just a generic Trump speech, or is it in any way related to the economy? Because if so, we might want to come back and actually stream this particular one. So anyway, put that on your radar for today, Tuesday, the 27th. Consumer confidence coming out at 10 a.m. and then Trump potentially speaking, or not potentially, it sounds like he is speaking at 2 p.m. I'm just not 100%. This was a recent add to the schedule. This wasn't always there. So I'm not 100% sure what it's about. But then he's speaking again tomorrow. You can see the FOMC decision 2 p.m. and then Powell speaks at 2:30. And then Friday, we're going to get some more inflation numbers. So it's just every single day we have more and more stuff to pay attention to, but obviously between the Trump speech tomorrow and the FOMC decision and earnings tomorrow's going to be kind of the crazy day of the week. Fed set to pause rate cuts with no clear path to resuming. So this should not be a surprise to anyone. According to Polymarket, there's a 99% chance of no Fed rate change whatsoever tomorrow. They are 99% confident that we will not be changing. So anyone who is betting on either a Fed rate hike or cut, you're gonna be wrong. The signs are pretty evident that it's not going to be happening this particular time. And as that article alluded to, what's really going to be moving the market is going to be more so in the market's interpretation of how wide open is the door for the next rate cut. Is it going to be coming in the first quarter, second quarter? Are they going to be waiting till the end of the calendar year? So it's going to be those types of things. And please don't forget like that this time around, it also has to interact with, in May, we're going to get a new Fed chair. Once again, May of 2026. We're in January, February, March, April, May. In 5 months, technically, Powell isn't leaving. Like, you actually don't leave. Like, he'll probably, I think he just becomes a governor, but it's not like he's done with it. Like, the way you're the president of the United States, you're just kind of like done afterwards. The way it works with the Fed is he's done as chair, but he's still a part of the Fed body itself. So that's kind of interesting. But remember in May that we're going to have a new one. Rick right here, who is from BlackRock. He's actually now the leading candidate. This is the third major person we've seen have clear odds. It started off as Kevin Hassett, then it switched over to Kevin Warsh, and now it's Rick. So Rick is actually, at this moment in time, as we're allegedly getting closer and closer and closer to the announcement of who the next Fed chair is going to be, it looks like this executive from BlackRock is currently leading the path. To my understanding of why, basically his opinion of the economy and the market very much matches Trump's in terms of let's lower the Fed fund rate. Let's do everything we can to make mortgage prices come down. He's kind of in that camp. So just because his stated personal ideology is in alignment with Trump and Trump's administration, that's most likely why he is currently leading the race. But like I said, this is the third person we've seen that is like allegedly there with high odds. So it does seem to change rather quickly. The one person that we know that's probably not going to be it is the Treasury Secretary, Bessent. He has said it, and Trump has said it multiple times, both of them, that he has no interest in doing it. So I guess if there were one person that we know it's not going to be, I suppose him, but I'm even hesitant to say that. So anyway, this is another thing where there might be questions about this tomorrow. We might get updates about it maybe tomorrow. Trump is speaking today and tomorrow. So it's just another thing that should be on your radar. And also in terms of timeframes, please don't forget that the Fed chair is going to be switching out in May of this year. So maybe from there, maybe that's when we start seeing rate cuts with the new Fed chair. Just something to consider, obviously a possibility. And then, hey, I'm finally unbanned from Twitter. I was banned on Twitter. They got me. Apparently, we're not allowed to have free speech anymore. So it's nice that this page is actually loading for me. Yeah, your boy caught a 12-hour ban. I guess I was popping off a little bit too much on the airplane, or at least on the airplane was when I found out that I had a 12-hour ban. But I don't know. It's just there's other people in this space. And when I say this space, I mean live streaming the market, like retail trading, who they don't like when you call them out. They don't like when you start to like show receipts of them being fraudulent, whether they're just like creepy dudes lying about their trading, whether they're buying bot views to seem like they're better and more successful than they actually are. They don't like that. And then all of a sudden, I'm not really known for what would, I guess, the proper term be. I'm not necessarily the nicest when I talk to people on the internet. Sometimes I use a little bit of my French, and I guess once in a while you can catch a violation on Twitter for that. But anyway, it was only 12 hours. We're back now. But anyway, you could see from earnings, there's a couple I want to go over this morning. United Health Group, Boeing, GM, UPS, they all reported. But really what I want to bring to your attention is tomorrow. This is like the big deal. So tomorrow, ASML, they create all the machinery for the chip fabrication in the world of NVIDIA, AMD, Broadcom. And then really check this out. Check out, this is a crazy lineup. Microsoft, Meta, and Tesla, even Lam Research, then leading us into Apple and Visa. And then really the next day, SoFi and American Express. So we're having some heavy hitters. I mean, Microsoft, Meta, Tesla, and Apple are all top 10 companies. So we're literally getting 40% of the top 10 companies all reporting like pretty much back to back. So please pay attention to these, especially because tomorrow we all know about the craziness of FOMC, and especially if you're playing options that expire later. Well, don't forget, right after the market closes, all of these can have a huge impact on the market. So I just need everyone to be like mentally prepared and understand that today, tomorrow, the next day, every single day is its own little bit of craziness. So please don't forget that. United Health posts modest earnings beat, soft revenue guidance as their insurer plots turn around. So when this came out, the initial reaction was a huge hit, and it is currently down 16%. It closed out the day at $351, currently trading at $293. So United Health Group, the largest health insurance provider in the U.S., getting absolutely demolished. GM tops earnings expectations, announces dividend increase and stock buyback program. So let's see how GM is currently doing. It is up 4.7%. Whenever you're increasing a dividend and the stock buyback program, that's a really strong signal to the market. So no surprise that it is looking pretty solid. Other ones that I want to talk about, just because it's kind of big news: Meta to test premium subscription plans for Instagram, Facebook, and WhatsApp. So as soon as companies start to hear about more potential money, I think this might be the real signal. I'm kind of liking the potential like second to third higher low here. I'm liking the news. This this might be my personal time to add meta to my long-term investment. I just put in some money for my 2025 taxes, so there's some cash sitting there. And I had this crazy idea on the plane yesterday when I saw some of this news breaking to put all of my money, all of my tax allocation money for whatever, the just retirement account stuff. I might do either 100% or 50% right into Meta. My big pick of last year was ASML, and that's worked amazingly. I'm thinking I need to get more Meta. The market just opened. Hang on very quick. TikTok blames data center outages for US app problems, denies censorship claims. So a lot of people having issues on TikTok. TikTok users are deleting the app with removals up 150% following US joint venture. So people not happy at the moment in time with TikTok. Just something, I guess, to share and pay attention to. And on that note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all, play responsibly, and if not, have fun. All right, so I'm not going to be trading out of the gate. Let's wait. We'll see. Obviously, we're pretty much right at the high from yesterday, which means the overall market, the S&P 500, is right there for an all-time high. But I do want to give you the key levels of the day, at least as I see the market. As I always do, I mark out the previous high, low, and close. That is the green, the red, and the white horizontal line. The white box is the transition zone, in my opinion, and also probably the opinion of most market makers. It'll be bullish above, bearish below, and choppy within, just looking at the current positioning of the market. And then the final thing on the screen are these yellow horizontal lines, which is basically just where all the big money's at. You can see there's a call credit spread at 980. You can see there's a call credit spread at 6995. You can see that some people still calls at 7015. To the south side, there's a bit of support at 950, and then there's more support at 920. So looking at the negative and the positive gamma, and just kind of gives us an idea of like really what might be in play for the day. Early before the market opened, there was a big block between 980 and 950, representing a pretty tight expected range on the day, which is kind of, I suppose, referring to the I guess the hold pattern is probably the best way to say it, really, when we're like kind of getting rocking for tomorrow. So let's just be a little careful on swinging for the fences today. Of course, just as a person appreciating the math of the market, I can understand on any given day, any given thing could happen. But in terms of odds, there are certain days where are more likely of a setup to say, oh, like, yeah, we got that big range, like the huge expanse day. And then other days, it's a bit more likely where it represents mean reverting. And if I had to guess, and just looking at the current setup of the market, today is more likely that mean reverting setup. Like if we go up too much, look for it to get sold. If we go down too much, look for it to be bought back up. Once again, mean reverting, like reverting to some sort of average value. I would expect today is a little bit more similar to that, and more so tomorrow and the following day have that capability to be those big range, like the huge move types of days. But obviously that's my personal thoughts and opinions, and I think it's going to be backed by like kind of the odds and the setup that I see here. But you never know what's going to happen. You never know random things of updates. I don't know, Trump can talk at any moment in time or something like that. So just want to put that on your radar. Obviously, throughout the trading session, I'm going to be showing you the options flow so we can get an idea of are people aggressive or not. The Mag 7 out of the gate is looking decently strong. People are buying calls and they're not really touching puts. So the Mag 7, that combination of Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla, thus far, and granted we're only 3 minutes into the day, is looking decently strong. And then for the S&P 500, similar situation. It was flat for about the first 2 minutes, and then there was a little bit of a pop where people were actually selling puts. That's interesting. So no one's really touching calls. So it's not really full-on bullishness, but it's definitely a lack of bearishness at this moment. But hey, do whatever you want. I'm not your mom. I can't tell you when to trade and when not to trade. I could give you my thoughts on when I would be doing something or not doing something. But for right now, hang on. I want to bring Meta up, because you never know when that thing's going to get going. It's actually break even on the day. I'm surprised the market isn't reacting more to the potential premium subscription type of stuff. What's up the most right now? So on my watch list, I see Apple up the most, up 1.9%. You have TSM, ASML up over 1. Same thing with Microsoft. What are you guys seeing right now, early morning? What's moving that you want up on the screen? I know obviously there's a ton of interest in gold and silver. Silver is currently down 5.7% after the somewhat of a blow off top from yesterday. Will it recover? Very possibly. It could also be the high water mark, especially as we're heading into an FOMC meeting and you have to talk about things such as like interest rates, the Fed fund rate, and obviously all that stuff can very much have an impact on things such as silver. So silver's in the bottom right. The SPY here are my key levels. I do want to know, this is for NQ. When I personally trade NQ, which is a lot of the time what I will be doing, let me switch this up. Over here, you can see I did a little scalp trade on my FFN accounts just because I had to get another trading day in. Other than that, I haven't traded yet today. If you guys have been following my Twitter, at least before I got blocked, you know that my 15 big Apex accounts, I have officially doubled up. They all started with 50K. They're now at, as you can see, 100,000. So from October 21st to yesterday, January 26th, whatever time frame that is, that's how long it took me to go from, I guess, 15 accounts, 5,000 each. That's 750,000 in capital, technically sim capital, now up to obviously 1.5 million. So a 100% return from October 21st until now. They're still live. Obviously, they might go up, they might go sideways, they might go down. I'm going to do my best to obviously ensure that they keep going up and up and up. So haven't really touched those. I have some take profit accounts. I pass some other Apex accounts. I have some Lucid accounts. So nothing too crazy. I would say the craziest thing is the Apex accounts right now, once again, going from 50K each to 100K each. So pretty stoked about that. October 21st until now, not even counting all the money I've requested out, which is 150,000. I'm up 750, which means at total, I'm up about $900,000 right now in totality, counting where the accounts are currently at and the money I've already taken out. So hopefully we could keep the party going. That's why I like to check NQ, just because I commonly trade it when trading futures. And one of the trades I like to pay attention to is the overnight trading session, the low right here that we made at really market open at 6 p.m. Eastern, all the way up until 6:50 a.m. I like to know that high. I like to know that low. If you run some basic stats on it, the high or the low is taken out in excess of like 85% of the time in the trading session. So that's tough sometimes because you don't know which direction it's going to be taking out. But if you get a good idea of the trend, well, that could give you a good target. So for example, let's say you're bearish right here at 9:30 for whatever reason. Maybe you're seeing something in the flow, or I don't know, break down on the 1 minute or something like that, or like whatever. It's not the most insane thing to actually be targeting 838. Obviously throughout that, because that's almost 100 points, you could be scaling out at key levels like 900, 950, 975. But just in general, it's a good thing to be paying attention to. And it's, as much as I pay attention to that, I'm going to be paying attention to obviously the key levels of the S&P 500, which once again, we're just chilling right at the key level, the high of yesterday. We're literally halfway through that transition zone. So the S&P 500 definitely is, on a relative basis, stronger than what we're seeing on the NASDAQ. The NASDAQ did just get its downside gap fill. So if you were playing that, congrats to you. You could see here that we opened above the high from yesterday. So what happened there, honestly, might just be a little bit of a chart cleanup. We just basically sold off, nothing too crazy. But you can see right here, we opened today at 628.91. Yesterday's high was 627.61. So we basically just quickly sold off $1, cleaned up the chart, got that downside gap fill. Can you see it on NDX? Same thing here. We still have not gotten that upside gap fill. That upside gap fill has been there forever. It was created, I suppose, on Tuesday, November the 4th. This little gap is still on the chart. Kind of blows my mind that it's still there, but you can see the sell-off from Monday the 3rd of November to the Tuesday the 4th of November. There's that little gap that we still have to get. So today might be one of those rare days where you get a double gap fill. We obviously got the downside gap fill to the high from yesterday, and now I'm wondering if we can actually revert and maybe hit 25,900 once again on NDX, not NQ here. They are slightly different in terms of their value, but they are tracking the exact same thing. Just one's on the futures market, one is on the, well, technically it's an index. But anyway, today it might be one of those rare double gap fills where we might get the upside and the downside gap fill. So probably a worthwhile thing to set an alert and just be paying attention to. So I wanted to put that on your radar. What do we have going on here? We're breaking down a little bit in the S&P 500. At this point, there might be support at 59. I would be watching the bottom of the transition zone, yesterday's closing value, and this psychological value at 950. So that's where I'd be just waiting. I'm not necessarily bullish or bearish there. I'd be waiting and attempt to be patient and see what the market's reaction is to that level. So this is the first thing that I'm really, really watching today is 950. How's silver doing? Kind of grinding up. Apple still actually up the most on my watch list. The SPY's taking a bit of a hit. It technically also had a downside gap fill. It just filled it within like the first second of the trading session. The Q's play was a little bit more evident. Here's a look at the options flow. Mag 7 popped up until about 934, then took a hit, kind of going nowhere now. The S&P 500 was decently strong until about 937, and then taking a little bit of a hit there. Looking at all the big player positioning, the thing that draws my attention right here is 980. You can see very evident call credit spread. A call credit spread, for those of you who don't know, similar to the world of sports betting, it's an underbet. So this play right here, where you see this positive gamma followed by this negative gamma, someone out there in this world, or maybe a group of people, are betting that the day will conclude below 6980. It's an underbet. It doesn't matter if it's 6979.999999, that's under, or it could be all the way down at 5,000. All they care about is the binary result to the question of, are you below 980? If yes, great, you get paid. If you're above 980, no, you do not get paid. It doesn't matter by how much. So it's a little bit of a different structural bet than if you like buy a call or buy a put when you're like, no, I need it to keep going in that direction. And the more it goes, the more money you get. This is very, very similar, especially to those of you who are sports gamblers. The concept of just, hey, are you above or are you below? Yes or no. So just keep that in mind. All right, silver's picking up a little bit. SPY right back to that high. It is the key level. That was a decent bounce. Look at that. It bounced right off the cloud, just the 1 minute cloud. Useful to pay attention to for active traders. If you're a day trader, scalp trader, I think the 1 minute is maybe not the end all be all. I would never say one time frame is the best time frame. In fact, the traders that I know and that I respect, none of them trade on a time frame. They're always using multiple time frames together. And I think as a day trader, as a scalp trader, this is a very reasonable one to keep in your overall cohort of things that you're paying attention to. So right there, I mean, you're not going to see this all the time, but that one is pretty damn evident right there. We opened up, we got a quick little downside gap fill, couldn't hold. We sold off to the 1 minute 50 EMA, and then bounced right back to where we were, the intraday high and the high from yesterday. And please remember right there, 6986.33. That is the all-time high. If you are paying attention to the overall market, I highly recommend you pay attention to this level. I would assume that if there are bulls today who are, hey, I need to get out before the FOMC meeting tomorrow, somewhere in this 6-point region is probably a very reasonable place for them to take profits. Maybe you're optimistic and you're like, no, I think we're going to run to 7,000. That's fine. And that could happen. I'm not going to sit here and say it's impossible. But to not be scaling out at least some of your profits, and when I say some, personally, I would do a majority of my profits right there. I think that's just reasonable risk management, just because the odds of a rejection somewhere in this zone or maybe a slight overshoot is pretty high. Now, if you want to have a runner on after locking some stuff in or setting your stop to break even, hey, have at it. But I just want to put that on your radar because it is just very, very close, which means we need to be paying attention to it. I see silver climbing. Silver is climbing. Gold is climbing. Bitcoin is not. Bitcoin is taking a hit. Dude, the fact that the world's two largest assets, gold and silver, are just trading with this much volatility, this much insanity, it is wild. It is very, very, very wild. So please be safe out there. I would say the similar concept of, hey, if something's going in your favor and you're liking it, and you're up a decent amount, what's the harm in putting your stop to break even? Especially when you're already seeing like a decent amount and it's moved multiple ATR in your favor. Like, you got the trade right, and in terms of how long will it keep going, well, no one knows. So what's the harm in setting your stop to break even? Or better than that, putting your stop where you're somewhere in the profit, guaranteeing that you're at least paying yourself for some of your efforts. But I do want to comment in general. I hope that this is helpful, maybe especially if we have a new viewer or something like that. Gold, ripping like no other. Silver, ripping like no other. This is obviously some sort of FOMO squeeze type of thing. And as much as this is crazy, I just want to remind you that it can come down even faster. Now, if I had the ability to 100% predict what was going to happen, well, to be completely honest with you, I wouldn't be doing this show because I'd be a multi-billionaire off being able to predict where the market is perfectly about to go. So clearly no one has that ability. But I'm asking you, I'm begging you. I'm a person who's lived through GameStop, AMC, Doge, Shiba, many other like just FOMO-esque events in the market from 2020 until now. I beg of you, whatever your favorite trend following methodology is, I don't care if you're looking at EMAs, SMAs, RSI, this, that, MACDs, whatever your trend following system is, if you think the trend is breaking down, it's time to move on. I know too many people who got in very, very early on AMC, GameStop, Doge, Shiba, any of them, like just to name a few. And then all of a sudden, it was good. And then things started to look a little weak. And they still had good profits. And instead of saying, okay, cool, the trend's breaking down, I'm locking in my profits, it's this idea of like, no, I deserve more. It's going to go even higher. And then guess what? It doesn't. And before you know it, all those profits, those unrealized profits, well, they get pretty close to break even. Then at break even, you're like, well, it's fallen so much, it has to bounce back. And before you know it, all those profits go from green to unrealized break even to now unrealized loss. I beg of you, if you think the trend is breaking down, however you define the trend, lock in your money. You can always trade it again. And even if you're like, I like it as a long-term investment, great. These are super elevated values. I am not against gold or silver in the long term because I'm telling you to be a trend following trader and potentially get out if the trend were to break down. That doesn't mean I'm against it. It's just you have to admit right now it's gone too high, too fast. So there's probably a better statistical chance of a breather. Let it take that breather and you could always get back in. You are not married to the position. You don't have to keep that one position forever. So as a person, I've literally seen thousands and thousands of retail traders fuck this up. I'm like, this isn't me just saying, hey, this is like a good trading methodology. Like I'm telling you, this is like from true, like actual trader history. As a person who I've seen this all, I beg of you, if you are up a lot, at least protect yourself at a minimum by putting your stop at break even. So even if everything were to go crazy overnight, okay, whatever. At least you're out at break even. It didn't cost you anything. I know it's a bummer, but it's better than losing. And then better than that, if you're got in really early and it keeps ripping, great, cool. I'm not telling you to get out, but I'm saying however you define trend, if the trend switches from bullish to bearish, get out, take your money. And if you want to get back in, wait for the trend to, guess what? Go back from bearish to bullish. The concept of trying to white knuckle it through that period of, oh, it's bullish, it's switching, I don't think the dip's going to be that bad, and I think it's going to go back. The like you waiting through that dip and just praying it actually reverses, it's not a good way to engage with the market. And I know in this example, obviously we are talking about gold and silver, but this is applicable to any of these. It really is. It really is applicable to this entire gambit of stuff. So I know some of you are going to construe it saying, Matt Short, he hates it. No. I'm saying just apply reasonable risk management because I've seen too many people with extremely impressive lofty unrealized gains. And I've seen too many people turn those unrealized gains, like life-changing unrealized gains, into losses. So if I could just like even help one of you watching the show today to avoid that, And hey, like I'm not coming down on anyone. I've done it myself. We've all been there before. If you've traded for any amount of time and you haven't made a mistake like that where you had good green and it somehow turns into bad red, you just haven't been trading. It's going to happen to all of us at some point in our trading career. So as a person who's personally made that mistake, gotten tripped up, more so because I've seen thousands of other retail traders do it, I suppose I'm just begging of you to not make it yourself. Please. Please, please, please. DCA into silver over the past year. DCA out over 100 an ounce. I love it. I love it. Gains are gains, man. Yeah, dollar cost averaging at key levels, that's also like a solid way to do it, without a doubt. There's a difference between physical and paper trades. I keep shiny, heavy assets. That's fine. I'm not saying you don't have to go all in, all out. Like if you're like, no, I keep physical as like a long-term thing and I'm actively trading it, or you could even hedge it out between the two markets. Obviously, you're long because you physically own it. You could hedge it out on the actual equities market and kind of box your position. That's another way to do it. Like if you are short the exact same amount in the market as you physically own, you have a box position. And that means that that movement, as long as you are perfectly pairing it 1-to-1, whether you go up or down, you're unimpacted. So like I said, like if you are long physical silver or gold and you think it's going to take a hit, you could go short. And if you're short at a 1-to-1 basis, that means no movement up or down is actually changing it, because once again, you're long on one and you're short on the other. It's a box position. And then when you think the crazy movement's over, you can get rid of the one leg that you don't care about and then resume actually having exposure to a market. That's a little bit more, I would suppose, of like an advanced way to handle the situation, but it's applicable. You can do that. Obviously, it takes a little bit of back of the napkin math to be able to understand how to size it. So prefer it's 1-to-1, but let's just say hypothetically, you have $1,000 worth of physical gold and you could go short $1,000. So no matter what, up or down, they're perfectly counteracting each other. And you could just wait for the craziness to stop. And you could be like, okay, we went up, we came down. It's cool. I was unimpacted. And now I want to resume my long. And then guess what? You could just get rid of the short and you're back to being long. Like that's another way to do it. Obviously, the way that you execute it, whether directly going short and the product you use, is it with options, or you could do it in the futures market. Like there's things you have to consider. It's not like maybe necessarily as easy as I'm making it sound, but it's just, I guess, a little bit of food for thought on this one. Silver is dumping right now on an intraday basis. It is, but it's still actually, it is down 6.8 right now. I was going to say it's above its opening value, but it's not. It literally just cracked it. So yeah, I mean, you see gold and silver taking a hit starting at 945. The SPY and the Qs are starting to pop here. You have some distance to go. You have a little bit of distance to go. 980, 86. Interesting. How is momentum looking? 5 minute was bearish, went bullish. 30-minute bullish. 10-minute same thing, was bearish, went bullish. 5 minute on NQ, 10-minute on NQ, they are trying to go bullish. It is trying to give us the old reversal. So watching this closely, the 30-minute just kissed the 50 right here. This is why I love to watch the 50 EMA across various time frames, because you can see where did the 5 minute and the 10-minute revert to on the bounce? The 50 EMA. Where did the 30-minute bounce off of? The 50 EMA. It's just very evident that a lot of the larger programs from like big players consider the 50 EMA or at least something similar to be of importance, because we see a lot of reaction there. A lot of reaction there. This isn't the worst trade I've ever heard of. Where's Bookmap? Where can we see some players? VWAP is currently 975. There are buyers set up there. You can see at the bottom of your screen. Point of control is 26,000 flat. And we're, I guess, popping. Did I fucking miss this one? Looks like we missed a little bit of it. Wow, this thing is look at all that buying, just hitting the bid. Or no, excuse me, hitting the ask. Hitting the ass. The ask. But anyway, momentum, shorter time frame was a little bit bearish, but bullish now, bullish. I guess you could theoretically on the 10-minute wait for this 6 minutes to pass so this bar officially closes, but a little bit of a shorter term trend reversal from bearish to bullish. So probably something of note. As that's happening, gold and silver are taking a bit of a hit, but look at the SPY ripping, getting close. Once again, the all-time high is right here. It's the top, the green dashes, the larger dashes, 6986. Don't be surprised if there's a little bit of a rejection, a little bit of profit taking right at 80. We do see some positioning right here. Specifically, how big is it? It is 2.4 thousand sold calls. So don't be surprised if there's a bit of a reaction there. There could be a quick overshoot to tag the new high. And then I want to let you know that there's more sold calls at 95, but then there's some long calls at 7,005. So basically, this is region 1 to watch between 80 and 85, and then region 2 is between 95 and 7,005. So a little bit of a 5-point region, which remember, test 1 is right here for the all-time high, and then if we break and go past that, then we're between basically 95 and 705. So somewhere in here, and I just kind of cut it in half as people react to that potential, I guess, just that psychological level of 7,000. But look at that rip. The NASDAQ basically cleaned up the chart, got the downside gap fill, and ripped, and it is not looking back. I'm looking for one little breather to get in there. I just haven't had much of an opportunity. I mean, I guess it was a little early for me. 9:45 wasn't the craziest opportunity, or wasn't the craziest thing to get in. Technically, we were testing VWAP. Like, I just feel like I maybe missed the boat a little bit on this one here. Let me clean this up a second just so you can see what I'm seeing. Hang on, where is it? Right here. I mean, I guess somewhere in here, it wasn't the most insane thing. This was kind of a tough long at 9:45 exactly, just because we were still below VWAP, and it could have clearly been a rejection. You're long at 962, risking 44. 20 points of risk. The risk isn't bad, but maybe you're a person who doesn't like to go long below VWAP. And then I guess you had an opportunity in here around 981, risking about 963. That's not so bad. Once again, another 20-point opportunity. You're somewhat risking maybe this is a fake out breakout. Obviously, it did dramatically continue. So whether you're long at 980 or 960, well, we're all the way up here now, almost 100 points past that, 80 points past that. So you're already up a shitload if you caught that. And if you did, obviously a congrats to you. But this thing is just cruising. This thing is cruising. Yep. And look at that. We took out the overnight trading high right here at 26,043. Like I said, the high or the low of the overnight session is taken out in excess of 85% of trading days. So those are very good targets to have. And now we're taking out all these highs now. I'm trying to look for like the next reasonable level. Just above 26,100, I see like a little shelf. So for those of you trading NQ, like just above 26,100 is a level to watch. That's about 50 points from here. Something to pay attention to. I wouldn't mind a little bit of a dip. Honestly, I know some of you are probably already long, so you don't want to hear me say this, but from a selfish standpoint, I actually wouldn't mind a dip all the way down to 26,000 flat, just so I could play off that key psychological level. I know if you're long up here, the last thing you want to hear me saying is, oh, I wouldn't mind a 50-point dip, but hey, I guess to each their own. We're all trading our own account, so I wouldn't mind like a 33, a 50%, like some sort of retracement. I just don't want to be chasing it at these highs, because knowing my luck, the second I go long, if I were to chase this with you guys, is like the exact moment we would be taking a hit. So I just don't want to, for the betterment of the community, I don't want to screw us all over by chasing this long right now, because the market gods have a sick sense of humor when things like that happen. It rips. I decide, oh, I don't want to miss this train. I go long, and then I just get absolutely cooked. So I'm going to wait on that to not screw everyone over. You're welcome. 5 minutes bullish, 10 minutes technically going to be bullish when it closes in a minute 35, 30 minutes holding bullish. We can mark out the next high over there. 5-minute on NQ was bearish, pop bullish aggressively. 30 minutes bullish. Yeah, I don't even know where the next alert should really be set on this one. Like I said, it's pretty much 26,100 as we're watching, but I'm liking the strength on the 30-minute and the 4-hour on ES and NQ. I recognize that we're coming up to our first potential rejection. Remember, this is the top of the transition zone, as I already alluded to. Literally rewind the stream 5 minutes, 10 minutes. I said, don't be surprised if we get smacked here or here, somewhere in this zone. A little bit of front running it right now. Actually, the dip in NQ is almost like not even measurable. Like we're getting a little bit of a baby dip in the S&P 500, but the Nasdaq's holding on. The Mag 7 was taking a clear hit till 953. We just popped. It's taking a bit of a hit now, which is weird though because price is going up. So we're getting a disconnection. The Mag 7 options flow is taking a hit while price is not getting the memo. S&P 500, huge pop from 940 all the way up to 955. So 15 minutes. That must have been a perfect algo. Look at this. Yeah, you can see it. See how it exactly started at 940? See how it exactly ended at 955? See how it exactly ran 15 minutes? To me, those are the hallmarks of a system, almost as if a human input into the program. Start buying at 940, it lasts 15 minutes, it ends buying at 955. So I would say with quite high certainty that this was just a bot program, buying. See how perfectly linear it was? It was a bunch of 0 DTE call buying and a bunch of 0 DTE put selling. So it was perfect on the options market. It ran for exactly 15 minutes. You're going to see this. Like, it's not like I know the human or the organization that did it, but when I see like those numbers like perfectly align with how a human would put it in, of like start 10 minutes into the day at 940, last 15 minutes, 940 to 955, and it's so perfectly regimented as if the same order is hitting the market over and over and over again for 15 minutes, it tells me that it was a bot program. What are silver and gold falling? I think you mean why are silver and gold falling? Because people are buying it and selling it at a lower price than they were. But it, like when people say falling, I always feel like it's dramatic. We're this close to the all-time high. Silver, we're this close to the all-time high. Like there's something about the psychology of trading where if things are going up, it's almost like expected, it's anticipated, and that's how people believe the market should work. And then the second there's a little bit of a hit, even if it's like just off of the all-time highs, people are, what in the fuck's going on? How is that possible? And I guess I would remind everyone to think that just these green movements are not given. As much as a green movement is given, and so is a red movement. So like when in doubt, zoom out, please. When in doubt, zoom out. Like we're just, I get that it's taking a percentage hit, like 7.5%, but the volatility of this has been crazy. I know it's down a lot from yesterday's close until this moment, like percentage wise. But with the current volatility of gold and silver, this could double to the downside, or it can literally go green today. Like it's all possible today. So just because you're seeing red now, don't make the poor assumption that it can't get worse. Yes, it could always get worse. And also don't make the assumption that it has to stay bad, especially when this is just becoming its own, like almost like meme coin. It's now like a meme metal. So like, I guess I just want to like drill home the fact of, kind of just get prepared for craziness, which is why, especially as an active trader, like let's say you're trading it on futures or something, it's going to be very, very beneficial for you to just have extreme risk management. Right? But I mean, what might be causing that today? Well, we know it's causing it. People, willing buyers and willing sellers are engaging at a lower price than they were yesterday. Like, I think a more interesting question is, why did it rip this much rather than why is it slightly down off of yesterday? Good traders are going to care a lot more about this craziness, the 131% gain from November until now, rather than the 7% drop it's taking from yesterday to now. Like, that's the interesting question. This is like a huge move. Like this is the cool question. This is the interesting answer. This is not it. Like what's happening today from yesterday to today, we've seen it before. It can take a hit, and guess what? It can still rally. It could take a hit. It could still rally. Like, and who knows? Maybe that is the high water mark. I don't know. I can't tell you the future, but I think it's the wrong question. The wrong question of why on an intraday is it down relative to the previous day rather than this look at this gigantic movement. That's the question. That is the question for sure. Any good leverage plays on gold or silver for recovery plays? For what to recover? My friend, all those names are green now. Maybe they're filled. They're open gap fill. I don't know. Wait, which ones? I don't see that message. I don't know what tickers you're talking about. But yeah, gold, I understand 7.4%. And if you play that in the futures market, that's a lot of money per contract. I'm not saying it's the nominal value of it isn't incredible, but the relative value, the 7% drop after ripping 130%, it's not that big. Did I miss some news for SPX? Nope. Once again, this move is not that big. I think sometimes the time frame you're on can distort the perception of how big the move is. This is actually not much of a move at all. If you look at SPX, we opened up at 65, we dropped to 58, and we're up to 78. This is actually a relatively small move based on what's going on. And I actually think today is going to be a bit constrained. As I was saying for like kind of the market prep thing, that I think today is going to have a lot more of mean reverting characteristics. You can see like right here, we got a little bit into negative gamma and then the market popped it right back up to positive gamma. I expect price to slow down in here. I'm not expecting a lot of like clear like whippiness and insanity or anything like that. Like it's just, this is resistance. That when you are trading from the south side up into positive gamma, this is resistance. So just, I guess, be careful. Mark out these levels: 980, 990, 995, 7,000. Some people, this is either a call credit spread or they're playing just above 7,000 intentionally. That could have been this position, but look at this. Now we're starting to see, so this bot program from 940 to 955 is over, and since then there's no more market participants keeping the market going higher. What do you think of UNH? I sold out of it. I'm done with it. I got out of it maybe 3 months ago, 6 months ago. Not my play. There's better opportunities in the market. Remember, just because you like a play, that doesn't necessarily mean that it's appropriate for you to put your money in it, because everyone, at least to my knowledge, unless you're the Fed, has a finite amount of capital. So just because you like a play, that's cool, but is it still like one of the best plays? And whether you do or don't like UNH, there's clearly, especially with the current state of the market, there's better opportunities. So yeah, I mean, it's taking a hit, and I guess, in my opinion, from a technical analysis standpoint, that would knock it onto the bearish side of things. But with that being said, I still wouldn't play it because there's better news. Yeah, UNH is getting destroyed. It's just had bad earnings. It's down 19%. This is the largest health insurance provider in the United States. It's getting destroyed, but I wouldn't chase it to the downside because it's now trading at a 19% discount, and I'm not going to buy the dip because the earnings were not good. So I have no reason to be bullish or bearish on it. It's gone too far in the bearish direction to chase it, and it's down too much, and it's just not looking good to be bullish. So it's just not my play. Not my play. But speaking of which, should I be buying this dip? Speaking of which, a little bit of a dippity doodah here. A little bit of, I wanted it a dip down to 26,000 flat, but we did not get there. Here's a look at flow. Longer duration Mag 7 is holding up way better than the expiration for this Friday. S&P 500 did pop, a little bit of a drift down. Maybe this is the higher low. Do I like this current setup? SPY, it is improving a little bit. A little bit of a dip here to 69. Do I think it's going to get all the way back up? You could watch this trend line for more of my like pure technical traders. Obviously, you do have now you have a succession of higher lows, but also these fresh lower highs, green, like see these green triangles. So a little bit of consolidation. How's NQ right here? We're running into these sellers at 50. We just try to crack them a little bit. I have no idea what those icons are for.
Order submitted. Order filled. Order filled.
Oh, fuck. Hang on. Is my trade copier set up properly? Yes, I think. I think it is. Not 100% sure on that one.
Order submitted.
All right, I'm just putting in my risk.
Order submitted.
What are these icons? These are new. I must have installed something new on my book map. I need to double check what these are, but it almost looks like... Is it just giving me the size of the person traversing the spread? Does anyone know what these are? I could look it up. They're just new for me. I did install some new stuff into my book map, and I guess this must be one of them. But I don't know. Hey, a little bit of an alert here. We are at least getting some new icons. Do you think the extra option expiration on Mag 7 will change the way they trade? 100%. I actually think it's going to end up... I think it's already kind of like a big deal, just because we can mimic to see how the S&P 500 has changed ever since they rolled out zero DTEs in 2022, I want to say. And technically, they're not zero DTEs now for every day of the week, but they are for Monday, Wednesday, and Friday. So the fact, I think it's going to be a noteworthy change. And whatever the change is, I think it's actually going to get more prolific as the time goes on. So I don't think it's going to be one of those things that's like a shock to the system and then that's it and it fizzles out. I think it's kind of a big deal, and I think it's going to become a bigger deal, in my humble opinion. In my humble opinion. Looking, if you're trading NQ, I'm looking for this break of 2680 is what I'm looking for. 2680. Some sellers are at 75 and 80, so kind of watching those key levels. We're right at that trend line that I called out in the S&P 500 right here. You can see starting at 940. This was the start of that buy program. We had higher highs, higher lows, and it was kind of crazy in the options market to watch it in real time. Bunch of zero DTE call buying and a bunch of zero DTE put selling. So you're adding positive delta, removing negative delta, sending things higher. This price movement to the upside is exclusively because, well, probably a little bit of FOMO and whatnot, but it has a lot to do with the fact that market makers have to hedge out their books properly to all the new trades, and that is sending it higher because they want to be net neutral against all those new options trades. So since then, right here, you can see that popped us up. We pulled back. We put in this higher low. So that's the first evident higher low of the day, at least on the 1 minute. And now we're seeing if we can make a higher high, continuing this bullish trend. So yes, I do like the higher low at this moment. We also have lower highs. You can see we haven't really broken 78, 79 yet. It kind of... We saw this stop right at that key level of 80. So we're either having bullish consolidation or we'll break out and it's legitimately bullish. Those are right now the two structural options, at least on this time frame. Remember, what you see in terms of technical analysis and the structure does change based on the time frame you're paying attention to. What you see on the 1 minute could be wildly different than the 30 minute, could be wildly different from the daily chart. So please be, don't assume because you see bullishness or bearishness on one time frame that that's necessarily true across the entire board. You definitely want to be a little bit careful with that. A little bit careful with that. So we had a little bit of a hit here at 10:05. I got in after it to see if I can chase it to the long side. It was a little bit later. I should have been a bit quicker to respawn. UNH is trying to bounce off of this bottom, but down 19%. Silver's taking a hit. It's just going straight down. Silver's taking getting clobbered right now. Clobbered. Where was I? Are those? I think I have the trade copier set up properly. I think so. I think this is what I intended to do. You never know. Let me go over to the 1 minute. It is not 10:30 yet, so we don't have the IB yet. We don't have the IB, but we do have the 30-minute Orbo, which is still not broken on the SPY, but it did break to the upside on the NASDAQ. So the NASDAQ has a bullish 30-minute Orbo breakout. And when I say that, I mean, if you look at the first 30 minutes of the day, mark out the high, mark out the low, pay attention to which one breaks. The NASDAQ did break to the top. It just did it right here. Actually, it did it literally the next minute. So the 31st minute of the day technically broke the Orbo. The S&P 500 has not broken the high or the low from that first 30 minutes. So worthwhile to pay attention to that. Gold still taking a hit. VIX is not doing anything. The Russell small cap is catching a bid right now. The small cap sphere is catching a little bit of a pop. Google, nothing. AMD is looking good. Nvidia is looking good. Tesla did get hit, recovering almost green. Apple did pop, giving some of it back. Amazon's looking good intraday. Palantir's looking good intraday. Microsoft popped, but now just kind of grindy. Avago did pop, giving it back like Apple. TSM not doing much. ASML, runaway train. This thing is the gift that just keeps on giving. The gift that just keeps on giving. All right. Oh, if you are in the Discord, one of my Q plays did get a fill. Let me take a quick screenshot of that as I'm trying to manage everything else. One of the QQQ swing put credit spreads did lock in. So I just want to call that out if you are in the Goonie trade. Actually, two of them locked in. The SPY did as well. Okay. I'm taking a screenshot as quickly as I can. Apologies for the screen looking messed up. I'm just trying to be expedient about the whole thing. So the SPY for the 29th locked in, and then also the QQQ for the 29th also locked in. So locking in some of those tendies before the FOMC meeting. Don't mind that whatsoever. Where are you guys in the Discord? Swingers. All right. So locked in 2 plays today thus far. We'll see how this all ends up going. But hey, we're starting this beautiful Tuesday out with some gains. SPY and QQQ locked in. Nice. Haven't done any 0 DTE premiums yet. Just kind of waiting for things to either show a little bit more strength at this point. It is more like it is on a relative basis stronger than it is weaker. But I'm waiting for a little bit more strength to see if I actually like this setup. To see if I like it. So patience. For those of you who are maybe just joining in now, in terms, when is the FOMC meeting? It technically starts today, but we get the results of it tomorrow at 2 p.m. Eastern, and then Jerome Powell speaks at 2:30. He's the chairman of the Fed. So FOMC meetings are for them, for the people who are in the meetings. It's a 2-day meeting. It starts today, Tuesday. It goes to Wednesday. The public, us, we get the results at 2 p.m. on the Wednesday. You'll generally, like, I'm sure there's exceptions to it, but generally it's always on a Wednesday at 2 p.m. You get the results, and at 2:30 the chairman speaks. I find day trading works best when you collect 50% of gains per month and move it to long term. So when you have bad, you're always up taking breaks. Yeah, I mean, that's one way to do it. I'm not saying necessarily that's the end all be all, but if that's the way to, like, for your psychology to protect yourself, I think that's like a pretty reasonable way to do it. Speaking of those gains getting locked in, if you want to join up with the Goonie Trading Discord, you can do so. It's pinned to the top of chat. It's in the description of the video. If you tried so in the past and you had a tough time syncing your locals to your Discord and that, this process is far easier. We made it in-house. I had some buddies from Penn State who I went to school with. They were kind enough to help me with like the development statement of this. So you could check it out. Like I said, it's all in here. If you have any questions, you could just hit this contact button and reach out to me, and I will personally be responding to you. And also shout out to Take Profit Trader. If you use that code Goonie, you get 40% off and never pay an activation fee. Based on all the current prop firms that I trust, this is currently the best deal. So if I that's the way I operate. On any day that I need new prop firms, I just buy the ones on that day that have the best offering. And the situation itself is like very, very dynamic. It changes seemingly every day, every other day. So whenever we're talking about it in real time, I'm more than happy to let you know who I think is running currently the best deal. Like right now, Apex is not running a deal, so I wouldn't buy an Apex account. TPT is running a good deal. So I don't think it's necessarily appropriate to have like unwavering loyalty to one firm and be like, oh, I'm never, ever changing it, just because it's so incredibly dynamic. The amount of news and the craziness of this particular world, the SIMDA-funded world, it changes a lot. It changes rapidly. I've said it 100 times before, and I'm going to say it 1,000,000 times more. Trust these firms as far as you can throw them. Hey, as long as things are working and you accept the current prices and the current rule set, great, have at it. If things start to go sideways, which I hope they don't, but if they go sideways, move on to the next one. You should not be married. Matt, Apex is 90% off. Did they just announce it? Let me look this up. I might have been wrong. I might have been wrong, folks. I'm not seeing it. Are you just screwing with me? Did I get an email? It's not on their website. I think you're messing with me, man. Are you just... I am not. No, I think you're screwing with me. I think you're joshing me. I think you're messing around. Which, hey, if you want to be like that, you know? But right now, to the best of my knowledge, this is the current best deal, TPT. Just so you know, I have those, but those are not my 50K accounts. Those are my 150K accounts. So these are pros. If I do well, I think I need to get them over 6K, I want to say, before I can start taking out money. I think that's the line in the sand on the TPT 150K accounts. So I'm not even halfway, but hey, hopefully every day I'm a little bit closer. No, it was announced. I promised Nutty he'd just find out. 90% off is running. All right. Can someone use the code Goonie and tell me if 90% off on Apex? Because when I go to the website, it's not saying anything. Can someone try to use that code Goonie and let me know if it actually gives you 90% off? Obviously, if it doesn't, I'm not saying actually buy it, but you can't apply your own code. So like I can't test it, unfortunately. But can someone type in Goonie, Goonie? So some people are saying they got an email. I didn't get an email. Why the fuck am I? Don't you think they should tell their people? It is 90% off with the $70 activation. Gotcha. Okay, so some people are saying Goonie is giving you 90% off. All right, well, I guess that's new. I still don't have the confirmation, so that seems to be a solid deal. TPT, by the time you do the math, it's probably pretty similar. It's actually almost spot on price. It's somewhat dependent on how many attempts it takes you to pass the Apex, but I would say that these two right now are the pretty solid deals. But I do want to remind you that like the industry itself, day to day, it does ebb and flow quite a bit. So per day, I always just check their Discord. I rarely check their Discord, if I'm being completely honest. I rarely check it. Oh, what do I want to do here? I'm still in this long. I'm basically break even. Do I think this dip that we're currently seeing is to be bought? How do we look with flow? Let's do our sanity check. It popped. We're going flat. Mag 7. Grinding to the upside, but what is today? Today's a Tuesday, so these ones are expiring tomorrow, technically. How do we look on Bookmap? I do appreciate those updates, by the way. You guys keep me on my toes. Thank you. little bit of a hit. Is this dip gonna be bought? We have a little bit of a dip. It's not crazy. It's not much, but I'm just kind of watching the previous lows here. Right here, I don't know, somewhere around 10-15-ish. Like, is it gonna hold these lows? Are we gonna have equal lows, and are we gonna bounce? Or is it gonna come down to this like little flush that we had at 10:05? That's what I'm attempting to be patient about. But we'll see if I have enough patience. Or, you know, we might just do something. I just got an error message on the hero flow. I guess something with the data. Are we flying dark right now? Are we flying a little bit of buying coming in? Where are we here? Hang on, I just want to do some sanity checks. All right, 7,000, that's probably a key level. What is that? That's 35 over there. Oh, brother. Oh, brother. The real question is if this starts to pick up right here, would I add to it?
Order filled.
And the answer to that question is yes. The answer to that question is yes. I like the strength of the Mag 7. I liked the strength, but at least it's not, technically it's consolidating on the S&P 500. But to me, when I look at that, when I look at this, it more so favors the bulls. When I look at momentum, bullish, 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 bullish. So momentum is bullish. The intraday structure, it's not the most bullish we've ever seen, but it's more bullish than it is bearish. And of course, like, obviously I'm in one way or another commenting on the trend of it, and trend does switch. Just because things were bullish doesn't mean they have to be continue to be bullish. But for me, well, not just me, like literally just the stats of the market, it is more so trend following than anything else. But even if you're confident in the trend and you're like, hey, I like what's going on, you do need to protect yourself. So even with that, that's why I like to pay attention to like recent swing points. So obviously in this one, the major swing point would be right at 10:05, 10:06. So I'm kind of watching this bar here to see if we either do hold above it, kind of this blue horizontal line, that random dip that we got. In hindsight, the play was the right away, that reversal, because you could have gone long at 10:07, risking the recent low. You would have had minimal risk, and you could have played this all the way back up. And even now, your stop could be at break even, and you were still not tested. So if you were quick enough to react to that dump and then the very quick bounce, I applaud you. Like, legitimately, that's a good play. And I hope some of you in here caught it. I guess I was a little bit too busy yapping myself to catch that. So I hope some of you got it. Apex is for futures. Yeah. Someone's asking what's for Apex. So Apex is for futures, specifically sim to funded. If you kind of want a breakdown of like not only futures trading, but like what is sim to funded, this is on Rumble, and it's also on the backup YouTube channel. This one, if you're watching this right now, whether on Rumble or YouTube, this is the Matt Kohrs Show. On Rumble, it's the same one. On YouTube, we have a backup one called just Matt Kohrs. On this one, you can see me breaking down trading strategies, futures, what is Apex. So if you have any like kind of just generic like questions about this, it's all here. There's a lot of great, obviously, like free information. Check it out. And if you guys are bored today, or if you want to not bored but want to watch something interesting, check out this last video, major Apex problem. Basically, it's me asking you for some advice and help on a kind of an interesting problem that I'm currently having in my life. How much would Apex 50 cost overall with the 90% off? So it's probably going to be, what's the 90% off? Like 19 bucks, I think, 17 bucks, something like that. It's sub 20. And then with the $70 for the upgrade, if you pass, that's going to put you at 90. So it's under 100 bucks. 90-ish all in. But what's nice about it is the eval is cheap. So you could kind of degen the eval to pass it. And if like you're not lucky. It didn't cost you that much. So it is nice that the cost is loaded on the more of the upgrade, because that means you already passed the test. Like, that's the only chance you would pay it. So the fact that the eval is super cheap means you could kind of just sling it to quickly pass them. Yeah, so the all-in, I believe, is sub $90. What am I watching over here? What's that dip? 37 is the dip. This other dip is 19. 53. 37. So I'm noticing a double top, kind of maybe even a triple top, whatever you want to call it. I'm noticing clear resistance just below 980 on SPX. The equivalent of that on SPY is just below 696. And then clearly the Q's having an issue at 631. The question here is what we're doing here. Are we going to break the lows? Are we going to double top? Or is it going to be a higher low and we revert out? That's the structural thing that I'm currently waiting. We just need more time and more trades to pass to kind of get the answer to that. Because right now we know we have multiple double, triple, quadruple top on the SPY and the Qs. That's very evident. The question is what is the depth of this pullback going to be? Are we dipping below the clear low at 10:05? Are we going to just tie it? Are we going to like hit it and bounce off of it? Or are we going to have a higher low and continue with the overall clear bullish trend? That's what we're kind of awkwardly waiting for. And unfortunately, the market hasn't really been moving too much. When you say degen it, they also teach you how to trade or throw you into a shark infested. What? Does Apex teach you how to trade? No, they don't. In fact, they probably are actually rooting for you to not do well. They want you to do a little bit well, but not that well. Like, they don't mind giving you a couple payouts here and there. But no, they're not teachers. They're a sim-funded prop firm. They don't teach, no. You're going to find far, far more education on how to potentially be successful at trading on these videos for free than going to Apex. Like Apex, they're just not, and they never have. Like, this isn't a surprise to anyone. They've never pitched themselves as like an educator. They're not like an education firm. They're a sim-funded prop firm. All right, we're getting a little bit of a pop. A little, are we gonna get, hang on. This actually might be setting up to be one of my, more of my favorite trades. I'm waiting to see if Icarus actually fires off here. I'm waiting to see if Icarus fires off. Are you gonna do it, buddy? I see some buyers stepping in. I see some buyers stepping in. Can we hold here? And let's look at this. All right, some sellers are right there at 60 and then 75. I'm curious if we're going to take those people out. I am curious. Do I just want a pending order?
Order submitted.
I'll put in a pending order just in case it pops. Once again, pending order. I did not create a new position.
Order filled. Order filled. Order submitted.
All right. Once again, just updating my protection as I always do, or I try to do if I'm trading well. I am watching these clear sellers here. If you're trading NQ, speaking of Apex, you have clear sellers at 75, but what I find of more interest is 26,100. Not just because that's a psychological level, which is probably why people are targeting it, but another thing I just want to bring to your attention is historically we have, let me go to the 4 hours so you can see it, right here, right where my cursor is. It's just above 26,100. You can see we clocked it multiple times in early December, December 5th, 8th, 10th, and then also the 11th. So 4 separate times the NASDAQ tried to get above 26,100, and it looks like it maybe like pierced it by, I don't know, anywhere from 10 to 15 points. Like it just barely got above. Once again, this is early December, and that's what I'm kind of watching. Now, we still have distance, obviously, to even get to 100. That's about 40 points. So that in itself is like a solid return. 40 points, one NQ contract, that's $800. But this is kind of the region I'm watching there on NQ. That is definitely the region I am watching. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Let's see. Those sellers are still at 75. So to get to that 100, we have a couple places of battle. It seems like the first real battle is going to be here at 75, which I believe is roughly the intraday high. Yeah. Let me mark this out just so we have it. It'll be a little bit more clear. The intraday high is 75. So not as only that like somewhat of a psychological level, it's also a technical level. So no one should be surprised that there are sellers loaded up there. And then they're moving. They're actively moving, that's for sure. Actively moving.
Order
All right,
submitted.
I'm putting in a reach sell target.
Order submitted.
All right. I'm not, that order submitted is just orders for me to manage. I'm moving my risk around. I'm putting in some profit targets. It wasn't me adding to the position. Speaking of which, I should probably be a little bit better about my risk management. I keep watching this. I want to see 75. I see some people. What do we have going on here? All right. We should be making some money today. I do feel as if I have some decent positions. But I am managing 2 different chunks of accounts. So my mindset is a little bit getting torn this way, that way, and the other way. All right, lock this in. It'll make my life a lot easier. Come on, lock it in. Lock it in, 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 lock it in. Please lock it in. Please lock it in. Dude, it's like right there. Like, just give me the money already. And as you can see, the stop's already at break even on the other one. It is long 2 contracts. Lock it in. Lock it in. Yeah, we're having an issue right there. They moved it. Some people got filled here a couple minutes ago at 75, and then more orders came in at 80, and we got as high as like 79.25. Shit. To clarify, the reason I can give it a little bit more room is because my stop's already break even. As we were talking about before with the gold and the silver trade. Here we go. There we go. Bada bing, bada boom. Locked one in. The stop's already at break even. And then you know what we're going to do here is we're also going to... We're going to sell there.
Order submitted.
Okay. So that is for some of the quote unquote smaller accounts. Like I said, I'm trading my big accounts and my smaller accounts in 2 different methodologies. So the smaller accounts I locked in at 80, the stop is at break even, and I have a reach target for the running contract. For my bigger accounts, I just already have, I'm long 3 contracts. I haven't locked anything in. My first scale out's at 90. I do have a stop at break even. We're going to move the other stop to break even because there's no point in me taking risk at this point. If those get hit, I don't mind still being long 1. So I am trading them in slightly different methodologies. I'm not like perfectly copy trading it. I'm copy trading all the big accounts together, and I'm copy trading all the small accounts together, but I'm not... really, another way to explain it is Icarus has fired multiple times. I took multiple of the signals on the big accounts, while on the smaller accounts, I took less of the signals. So that's, I guess, just to give it a little bit. Do you ever trade cash accounts live? Yeah, all the time. I have two separate options accounts that I'm literally paying attention to and trading every single day. Speaking of which, yeah, Icarus did just fire. Not Icarus, Piper. What is today's date? Today is the 27th. Today is the 27th. Today is the 27th all day, I believe. It is okay. Yes, the 27th. Piper, did I type it all right? I did type it all properly. Okay, that's in there. If you're in the Discord, the Goonie Trading Discord, once again, if you guys want to join up, feel free to check it out. GooneyTrading.com. Just follow the process and you could get into the trading Discord. Piper just fired, gives you an idea of the statistical momentum on the day and what should be carrying through until market close. And then how is this going? Okay, I'm gonna let you guys watch that for me. And I do need to trade. Okay.
Order
Cool.
filled.
Locked one in. Once again, to clarify, I am taking on no risk. My stops are at break even. And I think on that good news, the smaller accounts are fully done on the day. Right there. Oh, let me pull that order. Good thing I checked. But just to, as you're hearing it, I just want to be as transparent as I can. These all locked in. Right here, 1.1, 1.1, 1.1, 1.1. So those are looking good over there. So those are flat. There's no orders. They're good. And then obviously on my larger accounts, I just locked in 600. So that's the worst case scenario for me on the day. And the way I know it's the worst case is because my stops are at break even. So if it comes all the way back down, boo-hoo. I made $600 on 15 accounts. That's thousands of dollars. If it runs, cool. I might make like really, really good money today. So stops at break even. Of course, I want it to go up. It would be a lie for me to say that like I'm so robot and so emotionless that I don't care about it. Of course, I want it to go up. It would be fucking insane for me to say I didn't want it to go up. But I must admit, when my stops at break even and I already have profits locked in, you just feel better because you're like, okay, cool. Do you have daily profit limits? When is enough? No. Well, when you're first trading Apex, there are like consistency rules and like kind of things that mathematically you have to consider. But for me, since I already have 5 payouts from these accounts, I have no more consistency rule. And this idea of when is enough, you trade the chart, you don't trade your P&L. That's a really silly way to do it. So for example, let's say your goal is $500 per day. There's going to be many days where, okay, great, you made 500, volatility is high enough and you could actually make way more than 500. But there's other days where you might be pressuring yourself to make 500, but there's just not enough movement. There's not enough ranges and you're going for something that the charts and the market gods are just not allowing you to do. If you're trading for like a certain amount of money, you're not trading the chart. And I don't mind it if the chart's giving you more and you just decide to stop. But if the chart's giving you less and you're attempting to overtrade to hit those numbers, that's where it can get really, really bad. Like I said, I don't really mind it if you're like, hey, the price action's amazing today. And let's say you have a maximum target for yourself and you're like, you know what? I hit that and I just ended on the day because like, hey, I'm happy with that. I totally understand that mantra. But it does get very dangerous the other way. The other way where there's not much going on. And then all of a sudden, like you're still going because you're like, no, I got to make that 500 today. I got to make that 1,000 today. But sometimes the opportunity is just not there. That's where it can get like really, really bad. And as for me, I guess maybe more so, it sounds like your question is maybe a little bit more in the realm of like, okay, like what are you going for? What are your numbers? Well, right now, because I have so much buffer, like I'm just going for whatever the chart gives me. As I said before with gold and silver, I'm going to attempt to stay in this trend as long as I think the trend is evident and I'm protecting myself. So it's a free lottery ticket, as in there's no downside. Imagine someone literally walking up to you and giving you a lottery ticket and they just say, good luck. That is how I love to trade. And I think more traders would be better off if they traded the way I do, as in, hey, it went a little bit in my favor. My stop's at break even. So that means there's no downside. If I am wrong, which I am wrong more than 50% of the time, if I am wrong, it knocks me out for break even. Okay, whatever. No sweat off my back. It was a free lottery ticket. A lot of lottery tickets, you don't win. But however, if it does go in your favor, Well, it's only upside. So the best case scenario is I make a lot of money, but what's most important in trading is what is the worst case scenario. And I've made it so my worst case scenario is I make $600 today. So like, why not? If it runs, it runs. If it doesn't run, it doesn't run. I've already made my money. So that's the concept of trading the chart and trading like the setup in front of you. I don't know. Like this thing could just get ripping. Maybe this is the high of the day and I should have gotten out. I don't know. I'll tell you better at market close today. All I can tell you is the best traders in the world are focused on their risk management. In terms of my risk management on this position, my stops are already above my break even. I've already locked in green. I already closed out the small accounts. It's a good day. It is a good day. Have they asked you to do that on a live account? No, they don't do that until after you request a big payout. So I get that question a lot of have they requested you to go to live and have they banned you? First of all, they don't ban anyone in terms of when they're already trading PAs. They ban you from buying new evals. I haven't bought new evals because I'm on the same account and I'm also just not eval banned in general. But once again, when people are like, I get that question all the time of like, how are you not banned on Apex? When people are banned on Apex, their current PAs aren't banned. It's them buying new evals. Obviously, I've had those accounts since October, so I haven't needed new evals there, but I'm not eval banned anyway. And in terms of going live, they do that after a big payout request and like approval. I haven't requested yet. I'm still trading the account. So those are the two most common questions I get, and neither of them are honestly applicable to me. Because I'm not really trading those evals, their performance. And in terms of going to live, that happens after you request and get approved for a considerable amount of payout. So I haven't run into any, or I guess I should say either of those situations. To be clear, are there any other questions on that? Like I've noticed because my accounts, I'm in the fortunate position of them being up by quite a bit. I mean, they started at 50K. They're now trading at 102 at the lowest. So I'm up $52,000 at minimum. So of course, whenever you have gains like that, there's a lot of questions. Are there any questions I could try to answer for you? Not necessarily just on Apex, but in general, or maybe even questions specifically to Apex. Are there questions on what is SIM defunded? Are there questions on like, how do I trade it? Are there questions on like any of the specific rules? Do you ever plan on trading a self-funded futures account? I have one. And that's actually how I really started trading, was futures. What do you think of Lucid so far? I like it. I don't necessarily love their pro plan. I think TPT seemingly has a better one. But that's kind of nuanced. The initial eval, I like that it's end of day. I am a fan of that. I like the flex better than I like the black, if that's your question. There are multiple plans. I like Lucid Flex better than I do black. But if you're like, dude, that's crazy, I love black, please understand I've only been on it for like a week and a half. This isn't, I'm not commenting on this as a person that has like months and months and months and months of like use on it. But I do think their version of pro isn't necessarily the best. I do like TPT's better. I actually think TPT's live is like the best one. But like, I like it enough to use it. I like it enough for me to give them money to trade on it. I like it enough to make, 3,000 with them today. Any advice on setting up a fully automated strategy on NinjaTrader? Yeah, like anything in life, the more time and effort you put into it, the better it's going to be. If you think that this is something that you could just work for a couple hours and then all of a sudden you have a money printer, I just want to set some expectations because it takes effort. I'm a huge fan of it. I actually think in this world, I can't get on my Webull right now, unfortunately. My public is working fine. I don't know what is going on, but I was trying to sell some premium over here, but my account, do I need to do it over here? Sorry for 1 second. Let me just switch up this screen. I don't want to like dox myself. Hang on. I'm having some technical difficulty. Fuck, all the premium. It's so far decayed again. Again, seriously. what do I want to do? It's just like this happened again yesterday where the premium I'm interested in is just so far already beat up because of how much we've already moved. Market just, let me switch this back, just took a pretty clear hit here. Let me go to what is this? Here's the 1 minute. This might be a little bit better for you guys to see. The vol levels are just so... Oh, I'm watching 100. Where do we see sellers? Yeah, right. See how we ran right up to 100? Right up to it. And then I see more at 115. That makes me want to sell one of mine at 112.
Order submitted.
Oh, anyway, what premium? It's just so far decayed. It's so far decayed. I don't necessarily need this breakdown anymore. Obviously, bulls are in control. I know when people see that the markets are up, some people right away want to be contrarians and think, oh, I just got to short it. Why? I mean, you don't want to step in front of a steamroller to pick up pennies, folks. Silver getting a little bit of a bounce. All right, sorry, I got a little distracted. Were there other questions on Apex or SIMDA funded in general? Are there any questions on the Goonie trading Discord of what it is, what it isn't? Apex is back to 90% off, making a 50K account just $19.70. Yeah, I mean, right now, Take Profit Trader is running a really good deal with Code Goonie, and Code Goonie is always going to get you the best deal. They haven't updated the website yet, but I did finally get the email that it is 90% off, so I can confirm. Many people in here already said it, but right here. All evals 90% off, first month 50% off recurring with coupon code Goonie GOONI, only $19.70 for a 50K eval. So just so you know, and then the one-time PA fees are 75 and 135. Depending on your account size. So yeah, code Goonie will make it. You can take this test on a 50K account for $19.70. And then if you do pass to upgrade it, it'd be another $75. So you're all in for 100, which happens to be roughly, I think, to go all in on TPT, it's like 102. So they're right now pretty much offering the same deal. On TPT, you could have up to 5 accounts. On Apex, you could have up to 20. I don't think one is necessarily better than the other. It depends on the aspects that you care about. Neither of them have DLLs, which I'm a big fan of. I'm a really big fan of the fact that they don't have DLLs, but just, I guess, to drive home the point, I mean, I use both. I have TPT. I have Apex. We have a little bit of a dip going on here. Not the biggest fan of that. Not the biggest fan of that. It looks like we are retesting the IB high right here at 26,075. Before we saw a lot of people selling there. So let's hope that resistance can turn into support if you're bullish. Obviously, if you're bearish, you're hoping that this does successfully break down. But 26,075, not only is it where we saw the intraday spike earlier today when we were opening up the session, later we saw resistance. And now it is perfectly the IB. The initial balance is just the fancy term for the 60-minute Orbo, the initial range. So it's literally, if you look at the first hour of the day, 9:30 to 10:30 a.m., you look at the high, you look at the low, you mark those out, and then that's the IB range. So this is the top of it right here. The blue is the 50% retracement, and then the other red is the low of it. So from this red to this red, that's your entire IB, your entire initial balance. It's literally the high and the low, and then here with the blue, this one, the 50%, it is the just first hour. And the reason people watch it, I have to admit, the trends and the stats surrounding it are impressive. Now, the question too is, why are they impressive? Like, why do people pay attention to them? Kind of like the old advice, the old knowledge is the fact that like big institutions and whatnot do all their trading within the first hour. So it kind of gives you an idea of the extremes of big money. I think there's some logic to it. I think there's some accuracy to that statement. I don't think it's necessarily 100% true every single day, but there's nothing that's 100% true every single day. Do I just want to close this? Or do I want to give it a second to breathe? Yeah, it got clocked pretty bad at 26,100. Knowing my luck, what it needs to do is knock me out of my position and then run all the way up there, if I really had to guess. I got myself in a little bit of a pickle because it looks like the buyers are coming in at 50 and like 52, but my stop's at 60. So there's actually a good chance it knocks me out, and then it could bounce anyway. Like I said, there are buyers lining up at 26,050. I refuse to move my risk down there just because it would put me red on the position. And after locking in a decent green trade, or at least what I consider to be a decent green trade, I don't feel like taking on additional risk. So if it knocks me out, it knocks me out. Boo-hoo. That's like a part of trading. Like you just can't get married to it. SPX ran up to all-time highs. Did it actually tag it? No, it didn't. We didn't hit a new all-time high. It got near it, as I called out, but right here, the all-time high is 86. And as I said, literally before the market opened, when the market opened, and as we were pushing, I said multiple times, don't be surprised if we get rejected in this region. We got rejected on the first attempt at 956. We built up, went sideways, finally got the pop, and then guess what? Also got smacked. Like, this is going to be a choppy, difficult place to play, just because there's probably a lot of people who are like, you know what? I'm going to sell it as soon as we hit that all-time high. Or maybe people are front running it by like a point or two. Right here, people sold at 85. The all-time high is 86. So like this right here, this 6-point region, maybe plus or minus a point on top and on bottom. It's a tough region to play just because you never know. Are people enthusiastic and playing it all the way up to it? Are they going to hold past it and look for the breakout? Or are they just going to get rejected? Are shorts going to come in because they're shorting the all-time high with like minimal risk? Like it's really not the easiest place to play. Obviously, I'm a bigger fan of playing with the current direction. And in this case, the current direction is to the upside. But I guess I can't stress this enough that you don't just arbitrarily chase it. Just because you're confidently bullish, you still want to do it with minimal risk. There's a very big difference buying at like 1031 where you have this risk, like the recent bar, the recent couple bar low, versus just arbitrarily chasing. Now, in both of those cases, you're currently up, but one of them you did it with less risk, which I personally believe is of incredible importance. Tell me about how you got into futures trading. Charles Schwab denied me. I just have been swing trading, buying low and selling higher. How did I get into it? I actually got in, my way into futures trading was really weird. I started trading I placed my first trades in high school, but of course it's like not that crazy because like what high schooler like actually has money? But that was technically when I first placed my trades. I had a couple penny stock trades back in high school. In college, I cared about trading, but once again, you're a broke college kid. But I started to have some internship money and whatnot, and I was reading a couple books, and I studied computer science. My background's in math, and I was always interested in it, and I got more and more interested in it. And then as I learned more about computer science, I thought this was circa 2013-ish. I wanted to create strategies that traded for me, like in my mind. And honestly, this kind of like somewhat holds true to like this exact moment. To me, automated trading is by far the best thing to do because it doesn't matter your emotional state. It doesn't matter if you're traveling. It doesn't matter if you're sick. It doesn't matter if your internet's out, like something like that. Like clearly, if you have a profitable trading system that is being run by a robot, it is clearly better than a human just because of the random pitfalls of being a human. So I came up with that, I came to that realization at this point, a decade and a half ago. And I truly do hold it all the way until this exact moment. I still deeply believe the best way to engage with the market is in a fully automated, emotionless, robotic way. And because of that realization, like I said, circa 2013-ish, I wanted to start making systems for myself. And to make systems, the first thing you need is data. And at that point, stock data was cheap. But once again, I was a broke college kid. options data was very expensive. So I was looking around and the only data I could find for free was futures data. And keep in mind, I didn't know what futures data was at all. So I started trading futures literally just because it was the only data I could get for free at that point in time. So I needed data to start doing back testing and analysis and this and that and the other thing. So in a weird way, it was like kind of forced upon me just because at that point in my life, it was like the only data set that I could afford, which is because like literally it was free. I dove into it, didn't know what it was, didn't know how it worked. And I just started setting up some paper accounts as in not real money. And I just started ripping it to learn about it. I guess I'm a big fan personally of like kind of trial by fire and see what works, see what doesn't work. And I literally just, who cares? There's no downside with a paper trading account. There's no risk. And I just remember I opened up an account. It was a paper trading account, and the first thing I ever traded was gold, GC, oddly enough, now that gold's actually ripping. But my first trade ever was gold. And once again, I just want to clarify, like this was paper trading. And I just took a huge gold position. I was trying to figure out how to buy, how to sell, what it meant. I didn't understand the contract symbols and the numbers. Like none of it made sense to me. So I just figured like just rip it. So I think I just went like either long or short, either 10 or 20 gold contracts. I was like, oh, that's cool. I woke up in the morning to see how the position was doing. Once again, paper trading. I think I was up like $200,000 or something like that, just from like an overnight movement, huge gold position. And ever since that moment, I was like, cool, like futures are for me. So I've always loved trading futures. In fact, I think it's actually one of the best products to trade. But I do also admit from 2021 to 2023, I took a big break from trading futures just because of my career in content. There was a huge desire and emphasis on following equities such as AMC and GME that I like had to build up the career. And I also personally had interest in it. So I don't want that to like kind of belittle the point. But due to my own interest in the story of GameStop and AMC, and also with respect to like trying to create the content, I guess, career that I currently have, I had to take a break from futures trading for a bit just because like there were only so many hours in the day. And then now that no one really gives a shit about AMC and GME and prop trading is becoming massively, massively popular, kind of like it's weird to see how this journey has kind of led me back to where I started originally. I remember at one point in college, this was like super, super degenerate. There used to be a thing called binary options. So maybe some of you now on Call Sheet or Polymarket, you've noticed that there's certain bets where like, where is Bitcoin going to be in the next 15 minutes? And you pick above or below a value. So back in the day when I did it, it was called binary options. And the firm that did it, this was like 2013, same time period. It was called Nadex, which I think they got ruled to be illegal. Like, I don't even know. But I was trading a thing called binary options on the futures market. So what I would do is every single hour they expired. So like at 1 p.m., at 2 p.m., at 3 p.m., you would pick above and below certain values for coffee, for silver, for gold, for the Australian dollar. And dude, when I found out about binary options, that was the exact moment that I became a horrible student. All I did all day, every day was not only try to trade binary options, but I tried to figure out algorithms that would trade binary options for me. And what I remember what I did was in that hour, like this was actually I shit you not, this is how I paid for my final year of school. I used this strategy across all of the futures binary options that were available to me on Nadex. So it was binary options on the futures market. In that hour, I had a system that if it ever moved 2 standard deviations away from the 1 minute 20 EMA, 1 minute 20 EMA, if it ever moved 2 standard deviations away, like if it moved up, I would sell all the unders. If it moved down, I would buy all the overs for the end of that hour. And that's what I ended up like running. And yeah, that's how I paid for my final year of school. Was I looked for in excess of a 2 standard deviation move in the hour. And then for the conclusion of the hour, I was betting on mean reversion. And I just had that run on every single futures contract that was on Nadex at that point. And I think from there, that was like, then, yeah, I started fixing iPhones as well. So I had some money from trading. I had some money from iPhones. And then for a bit there, my one buddy and I, at that point, if you wanted to gamble, like once again, this is like 2013, 2014, all the online gambling was on crypto websites, like offshore crypto websites. So we found out the one website, they had this like data leak problem where we could load in all of the blackjack cards. So at one point we had a card counting bot, and that was actually really, really funny. So and this Bitcoin was trading at like only 200, maybe 250, 300, something like that. Like it was not trading at like anywhere close. Like once again, just look at the prices in 2013, 2014. I remember like one time I bought it, it was right around the 200 level. But anyway, we started with 1 Bitcoin. And we had this blackjack counting bot, and we ran it up to 35 Bitcoin. So at one point, like the casino, whatever, our bank balance that I was doing this with, we had 35. And our other buddy who was kind of involved in it, he was turning 21, and we all had this idea of let's go to Vegas to celebrate his 21st birthday. And we did the math, and we're like, okay, so for all of us and the hotel and the flights, we did the math that we had to double it up. We had 35 Bitcoin, converting it back to USD. We needed about 70. So we took all 35 Bitcoin and we did some sort of sports bet. Like that was our grand idea. Do you know how smart and stupid this story is? We were smart enough to create a card counting bot to take money from an offshore crypto casino. But we were so stupid that we thought, just to double it up, what we should do is just one random sports bet. And as you can imagine, we lost that sports bet. So we never went to Vegas. The party was just at Penn State instead of in Vegas, which was a bummer. But now in hindsight, we could have just had 35 Bitcoin. So simultaneously, probably the smartest and the dumbest story you're going to hear of the day. Using high-end statistics to generate 35 Bitcoin, and then just degenerate college kids blowing it out on one fucking sports bet. It might have been 2 sports bet. We might have parlayed something, like 2 likely events, and maybe maybe it was like the best fight of the night, and maybe like it was something dumb. It was really, really something fucking dumb. So how many pizzas was that? At this point, it was too many fucking pizzas. So if you ever come into this show and you think, wow, Matt's losing a lot of money, I just want you to know for the past, 15 years of my life almost, that nothing's changed. It's 95%. Wow, that's smart. That's like crazy. He's building up money. And it's that final 5% of degeneracy that is by far the Achilles heel. It is by far the Achilles heel. Well, what price did you buy your first Bitcoin? First Bitcoin at around 200. Dude, you guys are making me remember crazy fucking stories. Like I said, my background's in math. I studied computer science. I was interning at Boeing in Seattle one year. And the kids I lived with in Seattle is also Microsoft. So I lived with a bunch of Microsoft people. And for whatever reason, the way they set up the internship, the Microsoft people started a week early, but they were my buddies and I wanted to go out with them. So I went out to Seattle a week early. So for the first week, they were all busy being actual adults, going to their internship, working at Microsoft, starting their life. And I had 1 week of nothing to do. And at that point, I remember Bitcoin was 300 because I bought 3 or maybe 3 point whatever. I bought $1,000 worth of Bitcoin. And I wish this were a joke. I wish I were making this up, but it's actually so absurd that I don't think anyone could make up this particular story. I took that $1,000 and for an entire week of my life, I was on one of these like offshore crypto websites and there was nothing to bet on. Like there was just like no major sports, whatever. It was the summer. Like it was that weird summer lull. But I did find out there was a youth soccer tournament. And I was like, that's interesting. They must be pretty good if they're making odds for the youth soccer. So I started just like, whatever, placing it, looking at the spread, looking at it. And by the end of the week, I think I realized that I had placed over 50 bets on an Icelandic youth soccer tournament. It was either U14 or U16. I spent a week of my life getting deep into teenagers playing a soccer tournament in fucking Iceland. There's just nothing else to do. I was like, all right, dude, fucking let's hope this Viking team wins. And the time zones were weird because I was all the way out on the West Coast and Iceland is wherever the fucking time zone they were. So I'd like research these fucking whatever U16 teams all day to try to bet, and I'd wake up the next day, see how they all either did or didn't do. But looking back on it, that might have been one of the low points in my life. Just Icelandic youth soccer, over 50 bets on it. Thank God that job eventually started and I had something to do. I think I just get stir crazy. One day you said here, I'm the worst trader in the world. And I decided to say, I felt, that's what we're here for. That's what we're here for. It looks like we're testing 6,100. Not much. I mean, it's just this, like, right here, folks. This is Gandalf. You shall not pass. You shall not pass. Do you think we should start that again? Do you think maybe like every Thursday should just be Icelandic youth soccer gambling days? Should we take Thursdays off from the stock market and just intentionally bet on youth sports? I don't know if we have other fellow people here in New York, but we could literally just go in person to like random recreational youth games and like build out our own sports book. Maybe that's what we should do. There's a gazillion different intramural leagues and stuff throughout New York. Maybe that's the real move. We just live stream it. Like we're just betting on like little Billy playing baseball and like dads have way too much riding on the game. Like we just get like way too into it. Like we're screaming at little leaguers like, hit the fucking ball. That's where I see this content career really going. Just taking over. I just feel like youth sports gambling is just an untapped market, just a really untapped market. That's something we need to look into that. Someone write that down. All right. Well, while we are still all awkwardly waiting to see if we get this breakout or not, I just want to clarify, I've locked in my stop start break even. That's why we're having a chill day. There's nothing like, I guess, too crazy in my book going on. I'm protected. I've already made money. We'll see however it goes. With respect to SPX, why are we struggling right here? Well, folks, not only is it the psychological level of 100 on the NASDAQ, it is literally the all-time high. Like we are basically right here at 1106, we basically tagged the all-time high. So what's going on right now? We're just going up to serious resistance. Now, in terms of odd of a break or rejection, it's about 50-50, maybe 55-45. I do slightly favor the current trend, and the current trend's up. So that's why I give it a 5% edge. But that's the name of the game with trading. It's not predicting the next move. Is paying attention to the key levels defined by technical levels, psychological levels, or even where the big money options are. Like right here, even if we overshoot it, I see a lot of options at 990, at 995. If you're I can't definitively tell you that we're not going to break above 7,000 and keep ripping today. Yes, of course, there's a non-0% chance of that happening. But if we were to play the high odds situation, hang on, we're back at right here. We're battling it out at 100. If you were to play the high odds, the odds would be, let it run into this positive gamma, take your profits and move on with your life. That would be the high odds play. Just because, like maybe it somehow magically breaks and keeps going. But if you're here just to say, hey, I'm taking the high odds play time and time again, you would either be locking in all of your profit in this region, or you would be locking in most of your profit and then maybe leaving on a little bit of a runner. And for me, just because like I'm in more of a conservative move, just because I'm jet lagged, I didn't get sleep, I knew I shouldn't be doing anything crazy, I actually locked in some of my profit earlier right here at 1040 and then instantly moved my stops to break even, just in an attempt to protect myself from myself, because I recognize that I'm not like fully on the ball today. Like my brain, I know when you guys come here, you're like, is Matt dyslexic? Like what, did he just make up a fucking word? Like what's going on? Why is he slurring? Like all that shit, that's normal. So then when you mix in the fact that I've had like 2 hours of sleep, it's honestly, sometimes you have to protect yourself from yourself. I guaranteed myself money today on a day I arguably shouldn't have been trading. And because of that, I moved my stops to break even. If it goes, it goes. Maybe I'm lucky. If it doesn't go, whatever. I made money. I survived a day and I can move on with my life. So I think this is kind of circling back to a good question that someone was asking earlier of like, okay, like what money are you going for? What are you doing? Well, you have to really appreciate the fact that the situation's dynamic. Not only is the market continually dynamic because you have different options influences, you have different news events, you have different catalysts, you have different earnings, you have different presidential speeches, you have FOMC meetings, but then also what's dynamic is you. Are you on the ball that day? Did you get enough sleep? Are you paying attention? Are you tilted? Are you fighting with your cat? Are you fighting with your wife? Are you fighting with a ghost? I don't know. There's just things you have to consider. Things you have to consider. And the fact that I recognize in myself, I'm not necessarily all-time high. We just did it. There she is in all of her glory, folks. You just witnessed history. 15 seconds ago. A mere 15 seconds ago. Can I get to the 1 second chart? Is that possible? Yeah, right? Right there. We spent 1 second above the all-time high. Right there. 11/12/22. 11/12. May it be written in the history books. Right there. At 11 a.m., 12 minutes, and 22 seconds. East Coast time. January 27th, 2026. We did hit a new all-time high. You know what? A little bit of a round of applause there, folks. Congrats to everyone. Congrats to all of you who knew you should be bullish. Congrats to people like me who every single time it dipped, I'm buying the dip, I'm buying the dip, I'm buying the dip, I'm buying the dip. Everyone yelling at me, but man, that's a shooting star candlestick or some shit. But Matt, we're already up so much. But Matt. Yeah, say but all you want. All I can tell you is we hit another new all-time high. All I could tell you is we hit another new all-time high. And then people started taking their profits right away. Look at that. Right as soon as we hit it, 11/12, same time, we ran right into it. Now, is there going to be follow through? Maybe yes. Buying puts now. Why? I don't get that logic. I don't get the logic of buying puts at an all-time high, and also the stats are completely against you. If you are a person who bets against the market, the S&P 500, the NASDAQ, or the Russell, whenever it's at a new all-time high, like the stats are out there. You can backtest it. You will be losing money. It is more likely than not that a new high pushes to additional new highs. Eventually that trend breaks because that's how it would have to work. But if that were your trading strategy, if you're like, nope, I always short at new highs, you'd be down. It's going back down by end of the week. There's no way you could definitively say that. You're guessing it does because you have some sort of bias that sounds like it was based on literally nothing besides hopium. But whatever. If you want to trade with your gut, you're not going to be successful. I do wish you luck. I mean, I think there's like 0.1% of the trader population who has a good enough gut vibe to be profitable, but don't assume it's going to be you. That's a really, really poor assumption. There are some people for whatever reason, just have really good gut feels. I don't know why. Hey, someone just sent in a tip on Rumble Wallet. How do I log in? And why is it not up in chat yet? Does it take a second? So do you get notified on your phone first? Someone just sent it in. That's awesome. I appreciate that. That's so kind. How do I? Oh, this one does it. Does it not show your the message though? I guess it'll be coming up in a second. But someone sent it in, and that's very, very kind of you. Thank you. But anyway, there is a certain group of people in this world that they just have this weird innate ability to look at a chart, and for some reason, they're just very good at it. But like I said, that is a small portion of the trader population, and you should just assume it's not you. Just assume it is not you. If you want to be successful, you should probably be backing it up by some actual statistics, and more important than that, very good risk management. And this idea of just saying, hey, we're at an all-time high, and I think it's going to be lower this week, That's just straight up stupid because it's not based on anything. And maybe you don't like that I'm saying that and you're like, rumph. Matt said my trading idea is stupid. I would rather you be butthurt by the fact that I said your trading idea is stupid rather than you lose money. I'm going to shoot you the painful truth at any point. I'm not here to coddle your feelings and be like, oh, but like maybe we could think about it, because I have to appreciate, like on this side of the camera, I have to appreciate the fact that you're probably putting actual money behind these like thoughts and statements and bets. So once again, I would rather you be displeased with me not agreeing with you, but I end up helping you make a better trading decision rather than you being like, oh, Matt always gasses me up and he like just agrees with me and I feel so good. And then you end up losing money. That test has been done. We saw it before with the AMC and GME community. We saw it with the Doge community. We saw it with the Shiba community. We saw it with the Open community. We saw it with all these things that were high flying, and then no one wanted to like have the balls to stand up and say, hey folks, like let's just be realistic with this. I agree with you. It's the casino, man. Yeah, but once again, in a casino, certain times the edge is in your favor, and that's what we're here to do. I fully agree that the stock market is the world's largest casino. But remember, even though most of the things in the casino, you're going to be a net loser in the long run, there are certain opportunities where the edge favors you. And that's what we're here to do. I like to think of our community as degenerate gamblers who still have a high appreciation for statistics, because we want to keep the game of gambling and being degenerate going forever and forever and forever, and ideally to even pay our bills. So I admit there's gambling, there's risk, there's reward, but with anything in life, you can measure out the risk and reward. And if you have a certain ability to appreciate the statistics and the math of it, you can identify those opportunities where in the long term, you could be net profitable. Can you explain your logic of how you place your stops? That'll be very beneficial for the community. It depends what I'm trading. If I'm day trading, I'm just going to be looking at all of the momentum right here. 1 minute bullish, 5 minute bullish, 10 minute bullish, 30 minute bullish, 4 hour bullish, 1 minute bullish, 5 minute bullish, 10 minute bullish, 30 minute bullish, 4 hour bullish. So on this one, when I see everything's bullish, that tells me the side to be on. I look over here, Icarus tells me when to trade. That's my system that puts alerts of statistically. I've done a lot of data mining of when to get in, when to get out. And then a lot of the getting out just involves with the trend breaking down. And once again, we're all going to bring a certain lived experience to the market. And that means that we're all going to kind of look at the market and trends and this and that slightly differently. Like, for example, maybe to you, the 20 EMA is the end all be all trend indicator. You're bullish above, bearish below. Maybe to someone else, they're looking at the MACD. If it's green, great, they're bullish. If it's red, if it's below zero, okay, they're going to be bearish. I'm not saying one's better than the other. I'm just saying, okay, develop one of those, decide which one is your favorite, and be on the right side of that. Be disciplined enough that if that is telling you the opposite way, get the fuck out. I find that a lot of people are actually good at getting in, and they're just really bad at getting out. Not everyone, but I feel like if we had to score ourselves based on our entries and on our exits, I would think that most retail traders are actually pretty fine at getting in. They're like, cool, I think this trend might be starting that or whatever. Even if there's a 50-50 shot, like your entries aren't what's going to make or break you. It's going to be your exits. In fact, I've talked about this a little bit, but just maybe for the new viewers, they did a study a couple of years ago, and then it was backed up by another trading firm. They took a group of like who they considered to be the best traders, and they just gave them trades, as in they were already in a position. And then the name of the game was, can you manage those positions and actually still be profitable? So once again, they did this research. They picked a group of profitable, good traders. They did not let them pick their entries. Shout out, G-Roth, CS on, I don't know your name at all, but you just sent in a $10 tip on the Rumble wallet. That's awesome. I appreciate that. But anyway, back to this research. They picked some of the best traders at the firm, and the name of the game was, you can't pick your entries. We're going to give you live positions, and you have to manage it. And then a couple of years later, another firm did it, and the results were the same. Good traders, not even picking their entry positions, are still profitable traders. So I don't want anyone to misconstrue this as, oh, my entries don't matter. I could do whatever I want. I can chase, this. No, that's not what I'm saying. Yes, your life is going to be easier if your entries are better. But most people, that's not the issue. Like the studies show that you could actually theoretically have fucking random entries and still be good if you know how to manage it, because all roads lead back to risk management. No matter how you slice it up in this world of trading, it is the end all be all, most important thing ever. It is your risk management. So various studies prove it. You could take my word for it. You could go fact check me. I don't really fucking care. Yes, entries are important. I'm not saying they're not important, but what's far more important is your exits, which really means it's your risk management. You can have truly random entries and still probably be a profitable trader. Yes, if you had a system that auto generates a random time from 9:30 to 4 p.m., auto generates it, and then also picks either bullish or bearish, just like randomly generates it. Let's just say we had two random systems. One was bullish or bearish, and the other one was the time of the day. A good trader with that randomized entry time and entry direction would still be able to be profitable, because right away they would be able to say, nope, I'm cutting it today because the randomized entry and direction is bullshit and it's too much risk. And then the other part of the time they would say, cool, I like it, and let's see if we can ride the trend as much as we need to. So please don't misconstrue this to me saying that the entries are not important. They are important, but exit is more important, which really means it's always your risk management. It is always perpetually your risk management. Statistics have more value than the money you're using. I fully agree. And I think that's kind of what sets our community apart is, okay, hands up in chat. I mean, we're way over today, but that's honestly just because I've been waiting to see if this is going to hit or not, just so I could show you the trade. But okay. Hang on. Let's go to NQ. Okay. Just for an example, how many of you have heard what I have drawn on the chart right now called a fair value gap? Or even right here, like the two blocks. Hands up in chat. Have you heard this called a fair value gap before? Anyone? Yes, no? What I just drew, maybe some of you have heard of this methodology, maybe some of you haven't, but it's just the idea of like, basically, if the wicks don't overlap, like from one bar to the other, see how it just like kind of cuts all the way through. You have this wick, you have this wick. That's a fair value gap. That's a fair value gap. And it's some stupid fucking thing about liquidity. First of all, it's stupid for many reasons, but that's not really the point of this. You can see in this example, had you bought in that dip, it would have looked good. Have you bought in this dip, it would have like obviously played out in your favor. So this is a good time to do it. What drives me up the fucking wall, dude, and it like literally makes me want to put a nail gun to the side of my head and hop in a bathtub with a fucking toaster, is people teach this like right here. This is how it goes. Like basically you have some cult-like leader who can barely talk, going like just fucking on endlessly about like some weird religious bullshit and some how it connects to the market and this, that, the other thing. It sounds fucking stupid. And then what they do is like, I've been trading forever. I've made the algorithm that runs the market. And here's the proof. Look at fair value gap. It pops up, pulls back. If you went long in there, look at that, how much money you would be up. And guess what? This is just proof to you that it works. You pull up, you pull back, you go again, another fair value gap. It dips into it. You go long, and look at that. You're up again. So they show you a small amount of data of times that it would work. Of like, look at proof. Like, yes, obviously anyone with fucking eyeballs can tell if you bought here, it would have made you money. If you bought here, it would have made you money. That is 2 data points, 2 hypothetical examples in a borderline infinite amount of data as it relates to the market by the time you consider all time frames. And what's crazy about all these conversations is they never actually give you the odds. They never say, like, for example, I'll give you odds right here. I'm going to give you actual odds that are actually usable. Market opens right here. Let me go to the 1 minute. Market opens we are above the previous day's high. We took out the previous day's high right at market open. You could also see that in the NASDAQ where I guess I didn't draw it out. What time did we take it out? Actually, we opened above it. Okay, so the fact that, and this is independent, but I'm just trying to show you the example that both the SPY and the Qs, both the S&P 500 and the NASDAQ is above the high from yesterday. As soon as you exceed the high from the previous trading session, in a major indices such as the S&P 500, the NASDAQ, or the Russell, or the Dow, as soon as you take out the previous high, you have a 78% chance of closing out the day above the previous close. So today, we opened above the high. As soon as we opened up today, we knew there was a 78% chance, almost an 8 out of 10 chance, almost a 4 out of 5 shot that we know we would close today above the previous close. Those are actual odds. That's like we have it in if it's a Bayesian probability. It's an actual conditional statement. If we are in this state and we measure this historically, how many times in the past has it worked? Has it not worked? Based on the past 15 years worth of information, every single time we take out the previous trading session's high on the S&P 500, you have a 78% chance of concluding the day somewhere above the previous close. Boom. That it's basic conditional probabilities, basic Bayesian odds right there. I gave you the odds, I gave you the condition, and I gave you the result. And you could do the same thing. It's slightly different on the NASDAQ. It's slightly different in the Russell. It's only off by 1 or 2%. And you could do the same thing to the South side. If you break the South side, instead of 78, I think it's 76, 77. It's not as good, but it's pretty much the same thing. Same thing. As soon as you break the low, what are the odds of you closing out the day, 4 p.m. Eastern, below the previous close? Once again, these are basic run-of-the-mill conditional statements. Like you can measure it. And the one thing that drives me fucking crazy about this group is it's always cherry picking. It is endless, like truly ceaseless cherry picking of look it would have worked. Look it would have worked. Why not run a holistic study? Why not be like, okay, I tested all fair value gaps on the 5-minute chart and whatever, here are the odds. And the reason they don't do it is because this is not a rigid, like, statistical study of the market. It's just like bullshit that, like it didn't work on the 5-minute, but if you drill down into the 30-second chart, we actually saw this. Like, it's always a game of like, it didn't work, but here's why it didn't work. And then they like kind of give you the runaround to do something else. Like it is something that is bullshit and actually got to the point where people who actually know how to trade looked into it enough. And then they started to do the back testing on it and it's not profitable. The actual definitions that they give and say, okay, like buy this dip, here's what I'm doing, buy this dip, here's what I'm doing. First of all, it's not well defined, but even when you try to like give it like a rigid definition of what you're doing and what you're doing, it is not net profitable. If you had a perfect algorithmic system in a motionless robot that traded whatever this ICT bullshit is over a large series of data, over a large series of trades, you would be a net loser. It is not profitable. In fact, because the data is so evident, you can actually do the opposite, because if over a large series of data you're perpetually losing, that tells you that the opposite is effectively true. At least in this case it is. That's not necessarily 100% true in the world of statistics, but in this particular case, ICT, it's a net loser. Boom. Like that's what the data suggests. Like if you like that, if you don't like that, I don't know, go fucking cry to your mom about it. But like a lot of this, so much of trading, people want to be like, someone tell me a basic super secret methodology that if I study it, I can make money. And there's not enough appreciation for variance. I think that's why sports gamblers and blackjack players and poker players are uniquely good at trading, because in their mind there's already variance. They get the idea of like sometimes the right trade, the right move is not necessarily going to be profitable. And actually the best people, the biggest overlap in trading, in my opinion, is actually poker players, just because it's a true game by the actual statistical definition of a game. There's unknowns, it's dynamic, there's updating information. It's very, very, very similar to trading in that sense. And I think that's actually why sometimes the best traders make the best poker players and the best poker players make the best traders, because there's just so much fucking overlap. And it's the things that you have to focus on, the skill set of like, okay, here are the odds, there's a right move, there's unknowns, that type of a thing. Like, It's just how it works, and you're accepting variance and risk and blah, blah, blah. And then you look at these dipshits on Twitter that like couldn't do basic fucking math if their like life changed. Did SPY change its name? It wasn't Straight Street, the name before. What? No, that's an actual company. The SPY is the ETF for the S&P 500. You typed in the wrong ticker there. That what you're looking at is an actual like individual company. SPY is the ETF for the S&P 500, with SPX being the actual S&P 500. Question, no, Davos, I told you it ended. I gave you guys a fair warning about Davos ending. If you didn't sign up for the free month on Goonie Trading Discord, dude, that's on you. I even extended it for an extra day just in case people were late to it. But I told you it was for that day because I know people are always late. I extended it another day, and then without announcing it, I extended it a whole nother day. And yeah, the code's done. In the future, we'll probably do it. But honestly, the amount of people who signed up was astounding. So my major emphasis is I have some bots and whatnot, some stats related things like already hooked up in like kind of testing. So I want to push it to quote unquote production just so everyone in the Discord has it. And I want to make sure everyone in the Discord is like understanding what's going on. And then from there, I'll maybe like to get another wave of people in there, maybe do it another free code. But of course you could sign up anyway. Like, but the ETF is now State Street. I don't have State Street in the name before. It's called State Street Spider. I just always knew it as the Spiders. I don't know. Maybe it's some business combination or something. I myself, I agree with you that I haven't seen it, but I just call it the Spoos. So trading inverted gaps is a net winner, right? No, not necessarily. I mean, you could literally do any trading and be a net winner or loser based on your risk management. This idea of having like specialty models, it's only going to like increase or decrease your like efficiency by like maybe 10%. The market is so randomly distributed, especially as a day trader, especially as a scalp trader. It's random. Like it is from a statistical standpoint. If you're talking about data less than a daily time frame, like if you're talking about tick or minute data, it is like mathematically almost indistinguishable from noise. This study is in the Discord, and everyone in the Discord, like you could back me up that there's there, and we've gone over the data over the last 20 years worth of information. I did a breakdown on the 1 minute, the 3 minute, the 5 minute, the 10 minute, the 15 minute, and the 30 minute. And if you look at the amount of red bars and green bars, it's almost perfectly 50-50 on every single time frame. If you are talking about time frames less than the daily does have a 4% edge favoring the bulls. The data is 54-46, but anything less than daily, it's like 50 point something and 49 point something. Any intraday data, it is almost perfectly 50-50. If you take any time frame from 1 year to as far back as you could possibly find, and you check any intraday time frame, it does not deviate. It is statistically indistinguishable from noise, which that doesn't mean you can't make money. It means that the game is much more focused on your risk reward management rather than finding anomalous patterns that you can make money off of. That's why like the group at Tasty Trade, which they say this, and honestly, at first I disagreed, but they're probably right to say this. The group that's probably made the most millionaire retail traders. I mean, if you go to Tasty Trade, they're never really directional players. They're just selling premium. They're just insurance salespeople. Like they're not like taking some sort of directional bias on this or that. They're taking advantage of the mechanical structure, or really the math structure of how options decay. And they just do that time and time and time and time again. So they're right. Like I mean, I don't have the data on this, but I wouldn't be surprised if when Tasty Trade talks about how like they've made the most millionaire retail traders, yeah, because they're not pitching some sort of methodology of like, look at this fucking fair value gap and this and that. No, they're just taking advantage of how premium decays. And they just do that time and time and time again. Tasty without Tom is less spicy. I agree. I still like hold a special place in my heart for Tasty Trade because what at this point 15, 18, 20 years ago. That's where I learned options trading. So I have truly nothing negative to say about them. But I personally was a big fan of Tom. So I was sad to see that he left a couple months ago. When the market experiences upward and downward movement on low volume, what does that mean? Low volume just means that there's less trades going through. There's less people actively trading. That's all it means. People really try to somehow assign higher low volume to being bullish or bearish. It literally just means less people are trading. That's all. I think there's certain things that people don't want to make as complicated as they should, such as options. And then there's things such as volume that people want to overcomplicate it when it's literally the most rudimentary concept ever. If a stock XYZ goes up by $1 and there's 1 million trades, okay. If it goes up by $1 and there's 10 million trades, okay, it's just more people traded. That's all it is. More people transacted. It means market makers made more money. It means exchanges made more money. That's literally all it is. I don't know. People seem to understand it when it comes to the world of real estate. For example, you can understand if you're selling a house and I'm buying a house, there's one willing seller and one willing buyer. And people kind of misunderstand that in the world of trading. It's the exact same. For every willing buyer, there is a willing seller. That's how volume is volume. People think that for some reason, there's an imbalance between buyers and sellers. And if there's more buyers, it goes up. If there's more sellers, it goes down. Not at all. They're literally markets only work by having the same amount of volume being sold as volume being bought. If you're selling 100,000 shares, someone has to buy 100,000 shares from you. That's how it works. Think about it in the real estate analogy. If you're buying or selling a house, there's one buyer, there's one seller. There's never, for you to sell a house, there's not an imbalance of sellers. It's not like there's somehow more sellers for you to be able to sell your house. No, there's one willing buyer, there's one willing seller. Stocks are the exact same. For you to buy or sell something, there's always a willing buyer and a willing seller, depending on what side you're on. And the only thing that changes is the willing buyer and the willing seller have to agree on the price and the amount, as in the amount of shares. So in the house analogy, you're agreeing on the house and then you're negotiating the price. So that's what can change. And that's why stocks or real estate either goes up or down, is because the buyer and the seller are agreeing on a higher price or on a lower price or on the exact same price. But that's the thing that I think when someone explains it, it makes a lot of sense. But it does, what I've noticed just from hanging out with some retail traders over the years, that at first, it can be a little conceptually weird because there is a lot of misinformation. People saying, yeah, there has to be more buyers for it to go. That doesn't make sense. Can you buy a house with apex gains? I don't know. We'll find out. It's not really done quite yet. Not done quite yet, but I should actually move one of my. So I'm going to leave one stop at break even and the other one about 25 points. So that should secure about $1,000. So worst case scenario for me is I lock in $1,000 if this gets hit and the other one's break even, or maybe it does rip from here and this never gets taken out. I have no idea, but just updating a little bit of my risk management. But anyway, on that note, we are way over on time today. I was hoping that something more exciting would happen, but it did not. I do want to let you know, I want to remind you that tomorrow is a very, very big day. So we're doing a lot of streams tomorrow. We're starting early because Trump is speaking. Then we're getting the interest rate decision at 2 p.m. So that'll be our second stream. And then within that second stream, we're going to be listening to Chair Powell at the Fed press conference. So we have a big day tomorrow. And that's just during the trading session, because after that, then we're going to be hearing from the earnings of Microsoft, Meta, Tesla, and Lam Research, leading us into Thursday, where we have MasterCard, Caterpillar, Visa, and then obviously the big one, Apple. And then on Fridays, SoFi, American Express, and Verizon, just to call that out, and Chevron and Exxon. So there's a lot going on with today. I just want to show you this. if we start getting into the 990, 995, 7,000, this is where I'm more than happy to take my profits. I'm already focused on scaling out. Like, this was the move. I'm happy to take my profits there. If you think we're really going to keep going, I wish you the best of luck, but you are definitely playing against the odds. It should also be noted that we did locking a new all-time high today. If you haven't already, sign up for the Goonie Trading Discord if you want to trade with me. A lot of day trading for futures, some zero DTE premium selling, and then also some option swing plays. That's like the major focus. Great community of people. Apex just announced a 90% off deal with that code Goonie, and that puts that at roughly the same price of TP2. So code Goonie on both will get you that good discount. Folks, that's what I have for you right now. Later on today, I will post how all my futures trades ends up. Worst case situation is I make $1,000. That's if the market were to drop right now. Or if it keeps going, I might be able to scale out at better levels. But the main point is I locked in all my stuff, or I put the stops already at break even. So from here, it's just the house's money, if you will. That's what I have for you. I do appreciate the vibes. I'll catch you later on today, and then we're going to be streaming once again tomorrow morning. I hope to see you there. I hope you crush the market. Peace.